Hi everyone, welcome to the webinar. I hope I don't look too tired. I've been up since 3 a.m. because I was on, I had to get ready to read the papers to then get to the TV studios for the BBC at 6 a.m. So it's all a bit hectic. Got lots to update you on and exactly what's happening with the markets. More importantly, how trading's moved on and the strategies we should be looking at. Now I'm going to share the screen with you straight away. We're going to dive straight in, okay? One of the things I want to share with you, because we've just been looking at Barclays, because we had a request from somebody for me to look at Barclays. Let me just show you Barclays, and we'll talk about other stocks, indices, Forex, all the rest of it. At the moment, that's where we're seeing the trend, because obviously the banks have fallen off a bit of a cliff and being asked, well, you know, how do you handle it? The down arrow means to go short. So for a while, it didn't do anything. And that's each one of those bars is 15 minutes, and that's from the 13th of December, 12:30, so about 24 hours ago, dropped off. Now it's rebounded a bit. And what I'm going to teach you in this webinar is, okay, well, how come we don't get all just the tops and the bottoms? Real trading, you don't get the tops and the bottoms. How do we know when to get in? Especially with what's happening with Brexit. What are the opportunities around some of the banks? What are the opportunities around currencies, indices, commodities? Should we stay clear of the Brexit noise and look to trade, I don't know, Canadian dollars or US stocks like Amazon and so on? What about the Trump movements? How much can we make for our account size? This is all the things I want to cover. But like I said, I am about to start doing that. Now, make sure you can all hear me. Put it into the chat box that you can indeed hear me. There's a little poll there which says, will it be a hard no deal Brexit or will it not? Okay, so answer the poll question. If you can't see it, there should be a red box with 3 white dots about there, and that should give you ample information. Now, what you can see here is we're going to give you some of the live updated trades as well as I go on through this and how we pick them, what you should do, how you can do them, strategies for you. Good, useful time in the run-up to Christmas, I'm sure, and for the new year. You know, learn a new skill, hopefully look to make an additional side income. That's our goal. So I'll go through all of this. I know it looks ugly and complicated at the moment, but don't worry. I will simplify. My job is to make sure that whether you're a beginner or experienced, I give you an easy, simple process through this webinar so that you've got something you can use going forward. You can see how people trade now. So all the errors that have been happening in the past, you get over those and we remove those, okay? So let's start off with the first thing. And these are some of the topics we're going to cover. The very first sort of key slide. This is me on the BBC at an earlier time. What the hell's going on? How do we make money out of market volatility? For those of you who remember George Soros, when the pound fell in 1992, I think it was, when we left the European exchange rate mechanism, he made about $1 billion. Famously made $1 billion. Okay, so how, when we get these sharp moves at these times of volatility, do we make the trades of a lifetime? What is it that they're, no, we're not going to look to make $1 billion. No, just forget the stupid numbers. My hope for people in this webinar is we learn a new skill. There's no guarantees of profits in the markets. We're going to try and learn a skill to try and make about £500 to £1,000 or dollars a month, okay? Some months you make more, some months you make less. The months you make more, you save for the months in which you make less or nothing. All right, so you iron out the ups and downs, so you make a net positive gain of, let's say, $500 a month. We keep it small. We're going to start off with demo accounts. Anyway, we keep it small and baby steps so that we don't get overwhelmed. And that way, the principle being that if you can learn the skills to make 500, you can make 1,000, you can make 1,000, you can make 2,000. Now, at the moment, December is the absolute best month to learn because we've got more market volatility. So if we can learn, it's a bit like riding a rodeo horse. If you can learn during the difficult times, it accelerates your learning because there's more volatility and it compresses the time it takes you to develop those skills. That's one of the reasons I want to do it, but also because we're getting big trends up and down. That's great as well. Joe, the answer to your question is yes. Also, guys, let me know where you're from in the world. Always good to know where everybody's from so that I can do that part of it. And then we're going to do some more Q&A as well. Now, will it be a hard or no deal Brexit? We've got to answer the question on the poll. I'm going to leave it open for a little bit longer. Okay. Let me know you can see my face as well on the little HD video. Hopefully that's not too annoying. You should be able to see me as well. Got quite a few people from London, which is always good. Quick checklist as we get into this. Close the doors. Make sure it's quiet, no TV, try and focus on this. Treat it like a one-to-one webinar, a seminar, as if you're at university, a one-to-one tutorial. Okay, so you can ask me any questions, make a list of your questions, you can put them in the chat box, make sure nobody's using broadband except you. If at any point you get logged off or it doesn't seem to be working, log back in, that's usually the answer. Get some water, all right, because you're going to be here for about 90 minutes. On the notepad, write down making money. The reason I say this is one of my mentors, a chap called David Kite. When 20 years ago, I wanted to be a trader full-time. I thought I better meet some of the world's leading traders. He was one of the 10 people I met. I then published it in a Financial Times book, which was sort of autobiographical almost as a book. And David Kite is in the rich list, one of the great traders of all time. And he said to me, you know what, Alpesh, we're here to make money. And I thought, well, you know, we should be embarrassed about saying that. There's nothing wrong with saying that. From Netherlands, welcome our European friends. Okay, Bournemouth, Wiltshire, fantastic. Okay, now I will try and give you some political insight, but as you've seen from the world of politics, doesn't necessarily mean we can trade it. That's me with my team at Downing Street. All right, talking about some of the technology, what we're doing in finance, and all the rest of it. And that's me on the BBC. I'm going to try and give you the same straight talking that you see from me in other forums. Okay, and I'm also going to give you insights from my 200 columns in the Financial Times. Now, you might have seen some of those. Diary of an Internet Trader, where I diarize all my trading week after week. I'm going to give you the best insights from those columns as well, from my 18 books, my experience as a hedge fund manager, and from the 10 of the world's leading traders, which were in my book, The Mind of a Trader. The reason I say all of this is because sometimes people say, well, where are you getting all this information and data from? That's really important, certainly in the age of fake news, that you know that. And I'm relied by news channels, CNBC, Bloomberg, BBC, to give perspective on the markets. So I'm going to give you some of those detailed insights as well, and make it basically incredibly valuable for your next 90 minutes or so, okay? Because I think it's that important. When it comes to the subject of making money, it's that important. So let's move to the next bit, which is this one. Why are people failing then? Listen, essentially, it's bad brokers. So we're going to deal with brokers, which brokers are rubbish, how they rip you off, and give you a real insight. I'm going to lift the lid. When I wrote a book about 2 years ago, I spoke to a lot of people working at brokerages. We got some inside information on how it is, you know, and they widen the spreads and they trade against you, all of this. So I'm going to give you an edge so you can beat the broker, as it were. Then there's the bad teachers, and feel free to write into the chat box if you want my opinion on any of the so-called teachers and gurus who run these institutes, academies, universities, and all the rest of it. I'll give you my hi Pearl, I'll give you my opinion on this. Essentially, you know what, it comes down to, when do we buy, when do we sell? You, me, and everybody else, we've got to make the same two decisions in all these Brexit markets. You know, we've got some great, amazing trades happening at the moment. And the reason we've got great, amazing trades is because thanks to the volatility of the market. Look at this. This is one from, anybody who watched my webinar last night will know we were shorting euro dollar. Look at what's happened since that one. It's fallen off a cliff this morning. I didn't know that was going to happen. All I know is I've got to make two decisions: when to buy, when to sell. Okay, given that we've only got two decisions to make and we all get the same, pretty much the same data, you can see the live prices there on euro dollar. What we've got to work out is what you, me, a hedge fund in the world, we've all got the same data, we've all got the same information, we've all got to make the same two decisions: when to buy and sell. So how come some are making billions, and how come 70% to 80% of private investors are losing money? What is it they're not getting right? Well, one of the reasons is a lot of private investors go into trading without any training, without any insight from the people who've got experience doing it. Or they go to these so-called teachers and pay them $5,000 or $10,000 or something stupid. Okay, instead of talking to fund managers and getting that insight, or, you know, I don't know, reading my columns in the Financial Times or whatever, you know, or listening to me on TV or whatever, you know. The point is, if you don't get some of those insights, you're going to mess up. So I'm going to try and give you the tips. And this is what it's about. You know, that down arrow, by the way, whenever you see the red arrow down, that means to sell. So that's when we got the signal. But the market didn't move for a while, and then it collapsed because there was already pressure for it to move more likely downward. So as soon as there was some news which came out, that was used as an excuse. There was already a weakening. It's a bit like if you jump on, I don't know, if you jump on a weak floor, sooner or later it's going to fall. And what we look for is the weakness beforehand, then what will happen is some news will come along, and yes, indeed, it'll fall. It's a bit like, you know, when you see those comedy programs on TV and they put a fake, and somebody's walking along the street and they put a fake floor. Well, we don't know when the market's going to fall, i.e. somebody's going to walk across that when the bad news is going to happen, but we look to see when is their weakness ready for that to happen, because we don't have a crystal ball. As I said on the BBC this morning, to see into the future, what we do have is to say, oh, these are weak foundations, this bridge is weak, it's going to fall at any moment, or this bridge is particularly strong, the market's going to rise, and then the news comes along and it actually helps support that. Okay, there's no certainty that news is going to come along, and that's what happens when you get losing trades. But I'll explain insights into all of this, okay, in a second. Fitzroy and Fiat are saying, and Mohan are saying, and Sad, actually quite a lot of you are saying lost connection. Let me just put that, lose connection, then re-log in. Okay, let me put that up. Sorry about that, guys. I don't know why you've lost connection. Sometimes that happens. It shouldn't be anything from our end. I'm going to close the oh, you know what? Maybe I'm going to pause the HD camera. That might actually help. Let's just pause the HD camera for a second. Will it be a hard or no Brexit? 63% of you think so. All right. Well, one thing I know for sure is I don't know anything. What? Alpesh, you think you don't know anything? What I do know is one moment the market will collapse like this, the next moment it'll rally like hell. Look at this. Okay, that's sterling falling. But earlier, look at it rising. The only way, in 48 hours, it goes up, it goes down. The only way we are able to trade that, okay, is being able to take the view when it rose up and when it went down. Now, what I want to teach you in this webinar is, okay, that's money to be made. There was money on the upside, there's money on the downside. Notice how we didn't pick the bottoms and the tops. We don't know how to do that. We don't know how to do that. We don't know how to pick the tops and the bottoms. We're not looking to do that. We're looking to get the meat of the moves and make enough money. 500 a month is our goal. We also need to know where to put the stop loss. SL is stop loss. We also need to know when to add to our positions when we've got some profits and use those profits to make even more, make it even more of a bit of a killing, okay? That's what we need to do, and that's what the point of this webinar is, to teach you some of those tricks, make some of that money, make that 500 to 1,000 a month, because if you can make 500 to 1,000 a month, like I said, you can make 2,000, you can make 2, you can make 4, and you keep going until you've got your own hedge fund. So these are some of the things. How much money should we trade with? That's what we're going to cover. What to do if you've got some profit. This is the biggest problem people have, and the private investors get it wrong. What they think is, oh, I'm going to wait. I've got a profit target. I'll wait till it gets there. And then they get worried and they take the profit too early. In actual fact, none of those things. First of all, you never set a profit target, because why would you cap profits? And we're going to avoid taking it too early, because what we're going to do is going to let the computer take us out, because we can't trust ourselves, and we're going to add to our winning positions. Write that down. Winners add to winners. So you're going to do something you've never done before, and you're going to go to contrary to all your instincts. Winners add to winners is what the best hedge funds do. All right, and I'm going to teach you how and when to know that. What to do if you're in a loss? Write this down. Losers add to losers. We're never going to add to a losing position. We're going to start with a small position. If it goes into a loss, we'll only have made a small loss. If it goes into a win, because we're going to add to our winning positions, we'll make more profits. That's the essence of partly how we're going to trade. We're going to make sure we're never stuck in front of a screen, because if we do that, our return on time invested will be poor. We'll also end up doing bad trades out of boredom. What we need to do is not just, oh, Alpesh, can we just sit there all day and just tap away at the keyboard? No, you'll do low quality trades if you do that, because that's not how trading works. It's better to pick one good trade in a day than 10 mediocre ones and waste a hell of a lot of time sitting there pretending you're a trader, pretending, oh, look, I'm working all day in front of a computer. Aren't I great? No. You know what? Place the good trade, go outside, work on something else, work on your biceps, okay? Or work on building up your trading business, whatever else. And we're certainly going to make sure in Brexit and with the Trump volatility, and both have happened at the same time, we're not caught out by market news, because we're going to make sure we get some good strategies to do that, right? So let's move on to the next bit, which is this. What are the worst things you can do? Now, like I said, some of the best tips I've got are from when I decided I wanted to be a trader. What I knew I had to do is get advice from the world's leading traders. So 20 years ago, I was at university, I was in your position, didn't have a lot of capital to trade with, but wanted some side income because at the university I've got next to no money. I thought, how do I meet some of the world's leading traders? So I thought, you know what, I'll approach them with a book by the Financial Times. And I said to the Financial Times, I can get 10 of the world's leading traders. And I said to 10 of the world's leading traders, I can get the Financial Times. And both agreed. So I met these people. It was published in the book. Don't buy the book. I'm going to give you the best bits in this webinar. It's 20 years old anyway. Okay, and this is some of the key elements of advice which we're going to put into this, and then we're going to go from the macro view right down to specifics. So I'll give you the general stuff first, and then right into the specifics. And I know I'm talking fast. It's just there's so much information to cover. Okay, the worst thing they said you can do is try and guess the news. You don't have the brain power, you don't have the number of analysts. So that's not the way we can trade and trying to guess the news. They said the worst thing you can do, and I was really surprised about this, is be in front of the screen all the time. If you don't believe me, you can have a look in the book if you want. Look, I only get royalties of £1 for the book. The Financial Times get the rest. So I'm not trying to plug the book. What I'm saying is I was shocked when they said that, because I thought they'd say, oh, we're sitting in front of the screen, we're just geniuses, Alpesh, because we're so clever. That wasn't the case. In actual fact, you know what? The thing they used to laugh about is how not clever they are. One of the world's largest traders, Bill Lipschutz, one of my mentors, global head of foreign exchange at Salomon Brothers. You know what his background is? Architecture. Wasn't finance, wasn't PhD finance. And if you want to know, if you think for a moment it's the PhDs who are the richest people in the world, you're wrong. You can hire a PhD straight out of Oxford University for about £25,000 a year, okay? And they're not the billionaires. Right, the billionaires are often the people who've left school at 16. If you don't believe me, look around you. It's the fact that it's the ability to simplify, which is what led them. So what we need to do is work out a simple process. We're going to do in this webinar, which means we're not in front of the screen, because it's the things that you think you should be doing, which is actually costing you money, not making you money. And that's what I learned from this. And luckily, because I met them 20 years ago, I didn't go down the wrong path. They also said one of the worst things you can do is not have this plan B for a second income. And certainly that's been borne true over the last 20 years between all the market crashes. Okay, so this is our second income. This is not going to be our day job because that's too risky on day one to say, oh, I'm going to just quit my job, Alpesh, because I saw your webinar. No, this is going to be, the idea is a side income, and we're going to take baby steps and small steps. Okay, and the worst thing you can do is try and think you're going to get rich quick over the weekend. You're not going to be rich by Monday morning. We're going to try and get rich slowly. And the exciting thing about that is, it's better to have something which gives us a little bit every day than trying to take those massive risks, which is why 70% of people blow up. I've analyzed why people blow up. If you want to know how to be successful, right, don't just copy what successful people are doing. Research what losers are doing wrong. It's just as important. And I've done both parts of it, okay? So we're not going to be doing that. We're going to reduce our stress, because none of us want to be doing any activity, whether it's trading or not, and be bloody stressful. I certainly don't, all right? Again, one of the worst things you can do is follow these trading institutes, schools, university, colleges. All right, these guys are charging you 5 to 10 grand. You lose money, and then they say to you, hey, you need to pay more. Forget about it. Put it into the chat box if you want my opinion on any of those charlatans. All right, if they're so good, how come they're not running hedge funds? Okay, how come they're not managing not only their own money, but other people's? Okay, this is our offices. Come and visit us anytime. We're a regulated FCA, regulated hedge fund, British company based out of 84 Brook Street in Mayfair. I wish I owned that building. I don't. Okay, we have a room in that building. We pay £15,000 a month rent. Why? What? Alpesh, how come you don't own the building? How come you're not, super mega rich? Well, I hope so. We will be. We've got about 90 million euros under management. It took 10 years to get to that. And people go, oh, how come you haven't got billions? And I always have to explain this, including to my parents. When we go and raise capital off our trading, we're going in after Goldman Sachs and before Morgan Stanley. Guess what? The family offices, the pension funds, and by the way, investors in our fund include AXA, Aegon, people like the founder of Cobra Beer, people like the founder of New Look. So we've got high net worth family offices, pension funds. But guess what? They're not going to put all that money into us. They're going to put it into Goldman Sachs and Morgan Stanley. So I've got competition as well, yeah? We've also got our funds domiciled out of Luxembourg and a small office in Singapore. The office in Singapore is not massive. It's mainly there because we also invest through a private equity fund that we've set up as well. None of that's really relevant to you guys. What is relevant is why you're here. And these, when we broke it down, we've asked people why you're here. These are the key reasons. So I want you to now understand why you're here and understand the importance of why you're here. People are doing it to earn a side income, to top up their mortgage, or their child's mortgage, or top up their pension, pay down rent, child's education. Okay, given that's the case, we don't want to start with live cash because these are too important. The reasons why you're trying to make money. We don't want to dig a bigger hole in trying to make money. What we want to do is start off with a demo account, start off slow, start off with a small amount. So these are all the things you don't hear from these people charging you thousands on their courses because they want to sell you a dream. Actually, the dream is we make a little bit for the long term. It's a bit like you're buying a rental property. It's going to give you rent and capital appreciation over the long term. You're not buying a lottery ticket today. All right, you're buying an annuity scheme. That's the idea. But first, we've got to learn the skills to do it, right? So let's learn the skills. This is where we are, by the way, in terms of the webinar. We're at this stage. First of all, I'm just going to kick off with some of the longer term holdings. People are worried about a market crash. What I've always done is I've always used algorithms and software since about, years, decades, okay, in order to work out what I should be looking at. Now, I'm going to just for 30 seconds, look at the longer term. Our long-term holdings, we use algorithms to tell us and evaluate various equities. These are our highest ranked out of 10 long-term holdings, okay? Not short-term. So today I was asked by the BBC, if the market falls, are you worried? And I said, no, because the kind of equities that we invest in for the long term are such that if the market falls, I know they'll be back. All right, just as in 2008, things fell, we lost a bit, and then we made it back because they were good, solid companies. So our algorithms will go through the financial accounts of these companies and look at valuations, look at growth, look at income. And I'll explain how it does this in a second. And then it scores it out of 10. Why? Well, because I'm a simple person, so I need things to be scored. This is how artificial intelligence works. I'll explain that in a second. So if you learn nothing else about trading, at least you'll know what's happening in the world of artificial intelligence, and that'll be useful. Okay. But that's just for the long term. Now, I want to put the long term to one side for a second, and let's start looking at what's happening with Brexit and what this is causing with the markets, my friends. Okay. Now, I personally think there's an 85% probability the worst is over. I mean, I know what you're thinking. God, it can't possibly get any worse, can you? This is sterling US dollar. Right, but we need to know, well, how do we translate that into trades, Alpesh? How do we translate that into specifics? Because talking generics, and this is going back to 2016 and saying, oh, there's a support and this is where we are, 85% probability the worst is over, but a 15% probability of the worst case is we continue dropping to 1.21 there. Well, yeah, but how do I translate this? How is this a trade of a lifetime? Is the trade of a lifetime to go short, or is the trade of a lifetime to say, no, we've got the base and we're more likely to rise up and therefore buy pounds right now? How do we work it out in specifics, and how much money and over what time frame, and where's the target and where's the stop loss? Those are still the questions, because even if we've got to make the decisions when to buy and sell, it doesn't answer those. And by the way, with our $1,000 account that we'll start off with, how much can we make in a year, for instance? With what risk? How long are we tying up the money? These are all the questions people have. These are all the questions that I will answer, so we get into the nitty-gritty specifics. One of the things that I've got to explain before we do that, and we'll look at all these specific trades and how we're going to do that, how we're going to pick our trades, how we're going to pick our winners, what we're going to look at, okay? Because those are the things you need to answer. How do we scan the markets for 15 minutes a day and then work out what positions to examine during that period? How do we decide? Look at all this data, live, real-time, free, that we have from many brokers offer this data, whether it's cryptocurrencies, currencies, indices, equities, oil, gold. I'll cover all of it. Don't worry. How do we decide? How do we decide in all of that what to trade, how often to trade, how frequently? And we're going to start off with a small $1,000 account. I mean, I know some of you will have tens of millions, I'm sure, to trade with, but we're going to talk in terms of small, realistic numbers, because most people are sensible and realistic. So what could that possibly generate for us? Okay. All right. That's what we need to know. So before I do that, let me just tell you how we get from to that trading success where we are today. And the way we get there is this. Look, let me just very quickly explain the background of how we got to our strategy. Trading in the 1980s, you had something as simple as moving averages. Some of you might know this, all right? People would look at sterling US dollar. They'd look at some moving averages and say, oh, you know what? The price is below the average it's been for the last 10, 20, 30 periods, or 200 periods, or 50 periods, whatever it is. And because the price is below its longer term average, it's likely to move back to the average. It'll revert back to mean. So they'd use these kind of simple strategies, and they used to work in the 80s. And then more people started using them. And some people said, oh, no, I don't want to look at the daily average, what the price has been over the last 200 days. I'm going to look at what it's been over the last 50 days or the last 50 minutes. And so you had all these people moving and pulling in different directions using the same methodologies. And so you had the markets going volatile, and then that approach stopped working, okay? Because some were buying, some were going short because they were looking at different times. So then in the 1990s, people moved using a bit of computers, but also just using not too much computing power, but a little bit of computer. And they started looking at pattern recognition. In the 1990s, they thought, oh, why don't we look at patterns? And why don't we look to see if over the last, say, 10 periods, if there's certain patterns, then the price moved up. There was a pattern, then the price moved up. Oh, what if that pattern repeats itself? And they started doing this. And then they quickly discovered, actually, you need a lot of data. Just because it was a blue sky today and the market moved up doesn't mean every time there's blue skies, the market's going to move up. So this pattern recognition was limited by people's misunderstanding of statistics. And it worked to some extent, but it needed refining, okay? And the reason I'm explaining all of this is because we're going to use all of this. We're going to use pattern recognition, but not the way it used to happen in the 1990s. We're going to use computers. So I'm going to bring you guys all up to speed, all right? Because part of the problem's been, and you'll know this if you've been reading my columns or hearing me on TV, is part of the problem's been that a lot of private investors have not been brought up to speed by the professionals, by the institutions onto what's happening. So they're lagging. You're lagging. That's why you're losing money. Okay, so then you had in the 2000s, people started using even more computer, more software came out, and they started using indicators and more computers. So they used the MACD, they used the stochastic, the RSI more and more, and they said, oh, these indicators will smooth out some of these moves and it'll make it easier. So is the market oversold? If all these indicators are at the bottom half, it must mean the market's oversold and therefore we should buy. And that avoided some of the problems of pattern recognition because they're using these multiple indicators, removed some of the problems of moving averages because these things were more sophisticated. But again, it suffered from the same problems very quickly. People started looking at these things in different time frames, and some were saying, oh no, that means to buy, this means to sell, let's go against it. And all of a sudden you had a mess. Okay, so all these indicators work some of the time, but not often enough. Nothing worked all the time. So what do we then do? All right, and the problem then became at the same time, a whole bunch of trading educators came along. Okay, around the 2000s, they started charging thousands, and they started advertising on places like Facebook in the 2010s. This is my Facebook page where somebody's put an advert up. And saying, oh, pay us £5,000 and we'll teach you how to trade with all the looking all compute. Okay, so that's then the evolution of what happened. And they shove you in classrooms, they charge you a fortune, you got hotel fees and all the rest of it because they realized, ooh, it's getting complexity. Wherever there's complexity, there's money to be made. Okay, and they said, oh, look, there's Elliott waves and there's Fibonacci and all of this, which is prehistoric. I mean, it just doesn't work anymore. And others said, no, don't worry. There's so much data. Let us spend hours teaching you earnings per share and valuations and EBITDA. Remember EBITDA used to be so popular, okay? And the problem then became, people said, well, yeah, we'll pay thousands for that. Then they said, oh, wait a minute, now we can get data from banks. Look, we can get bank forecasts. This is 2017 where the HSBC said, oh, this is what's going to happen with the pound. Okay, one spot one. Guess what? Didn't happen. The banks started getting it wrong, but their data was available. So private investors said, oh, we'll follow what the banks are doing. We'll follow what Goldman Sachs is doing. UBS is following. This is from 2017. I kept those headlines. And just to show you, 2017 January, Goldman Sachs got it wrong regarding the dollar and the euro. UBS got it wrong with euro dollar, okay? One said go short, one said go long. Both bloody got it wrong. All right. So where does that leave us? What do we as private investors do? Well, we need to get up to speed, my friends. We need to get up to speed on what we should be doing. And what we should be doing, bringing that up to speed, and I'm going to teach you some of the techniques that you should be using. We're going to use free software wherever we can. We're not going to pay some weekly, daily, monthly subscription. So all of this data, many brokers offer it. And we're going to try and be broker independent because you're going to want to use multiple brokers and switch between brokers because you don't want everyone to be too committed to one broker because in the end, I don't trust any of them, okay? I'll tell you which ones I do trust in a second. What we're going to do, all this data is live real-time data. Some of you will recognize it. Many brokers offer it, so it's not dependent on a particular broker. It's free. And like I said, many brokers offer it. Okay, so we're going to need to know, well, how do we get into this? How do we get into these money-making opportunities? Like I said, if you watch the webinar yesterday, you'll know we were short euro dollar, and that was a great little one there. You'll also know some of the other trades we had open. For instance, this is the DAX, which is the German index. Love it. Great little short trade. Then the long trade didn't work out. Then this long trade did. Yes, so that's what happens in trading. You get big profit, and then you get losses, then you get big profit, okay, and then you get another profit, which is in profit, but we'll see what will happen with that one, all right? And it's a mixture. Now, let me tell you how often we're trying to be right. We're trying to beat a coin because that's 50-50, and we're not trying to be right 93% of the time or 100% of the time or even 80. We're trying to be right better than a coin, less than God, which means we're trying to be right about 6 to 7 times out of 10, preferably 7. Now, how are we doing that so that you can copy it? Actually, it's now possible for private investors, though most haven't caught on, to try and use a bit of computing power, a bit of artificial intelligence. What is that? Okay, it is this. Partly it's pattern recognition, and a lot of people go, "What the hell's AI? What the hell does that mean?" Let me explain what it means. Okay, what it means. Let me just get this pen up here. Pattern recognition is basically looking at, well, patterns and saying, well, if this happened before, it might happen again. Let's take it a little bit more sophisticated than that. The areas we're going to look at is neural networks. I'll explain what that means. I know it sounds complicated. Pattern recognition, okay? We're not going to look at deep learning. We're not really going to look at machine learning either, okay? Now, what the hell does any of that mean? This is essentially what it means, and it's something your brain does every day. This is what trading now involves. It's what your brain does, and all that computers are trying to do are trying to pick out what good quality traders do in their brain, all right? So I'm going to teach you what good quality trading is manually in your brain, and then we're going to see how computers do it. Right? This is what it involves. And by the way, a subset of artificial intelligence is called machine learning, and a subset of machine learning is neural networks. What's a neural network? A neural network is this. We put in some inputs like, oh, the trend is high, or I don't know, moving average, or an indicator, or a pattern. We then weigh those. We look to see what's important, what isn't. How important is the MACD? Or how important is a moving average? How important is certain pieces of information? We've got to weigh them, and then we come up with an output. The output might be buy, might be sell. All right? That's essentially it. That's actually how your brain works. Let me put it this way. You come home late from work, your spouse looks at you, and your spouse, let's just use male and female cliches. All right? And she looks at you and she goes, yeah, is he telling the truth? He's been at work. And she'll do a neural network, and she'll say, ooh, there's lipstick on his collar, smells of aftershave, and his shirt's half hanging out of his trousers and his zip's undone. Let's put some variables on what importance we put on these factors. Yeah, kick him out the house. That's an extreme example, a bit funny, but that's actually what it is. That's how our brains work, and that's all we're doing in trading. So we need to work out, well, what inputs should we put into this when we're trading, and then how can we use the computers to make it easier for us to do, okay? Because the brains are easily fooled, and that's a lot of hard work. I'll give you another quick example of how neural networks work, and this is how I want you to be trading in the future, and how we're going to trade in 2019, and how we're going to make profits, okay? Age, you might put inputs like your age, your income level, your education, your gender. We then weigh those factors, all right? Boom, boom, boom. And we say, oh, based on those factors and those weights, you're more likely to be a Republican or a Tory, not a socialist, for instance. Okay, that's all it is. And that's the same thing with all of this pattern recognition and neural networks that we're doing in this. What we're doing is, so I'll tell you what the inputs are, don't worry, and how we weigh them. Now, the way I weigh it, the way you weigh it, different people weigh it differently, but they can all come to the same conclusion. Let's say you come home late, you got the lipstick, you got the thingy, and not only have you got your wife there, but you've got your mother-in-law. Okay, they might put different weightings on things. Your wife might forgive you, your mother-in-law won't. But the point is, you might still get to the same kind of similar outcomes just because the weighings are different. So there isn't one holy grail with any of this, is what I'm saying. And sometimes you might miss a great trade, and that's fine. Okay. For instance, by the way, we're short sterling US dollar, in case you're asking. Some of you are. This is the 1 hour bar. Okay, this is what's happened over the last, 24 hours with us. We had the great upward trade there, and then we've had the falling off a cliff. Now there's a whole lot of news going on. Notice how I've not talked about looking at the news. We can't look at the news. We look at the trends. We follow into those. And we had some inputs which generated that and told us what to do. Well, what were those inputs? Those inputs changed over time. 20 years ago, it would have been moving averages. Then it was indicators. So I'm going to tell you what those inputs are so you can bring your trading up to speed and know what the latest tricks and techniques are. The great news is, guess what? All this data is live, real time, and free. So at least that part's free. And then I'm going to teach you manually all the rules that you should be using so we know what to put in. In actual fact, you know what? These neural networks, they're a bit more complicated than I'm making sound. This is actually what happens with computers, and that's why people tend to use computers. But that doesn't really matter at the moment. We're going to just use simplicity to get to this decision making. By the way, if you really want to know about this, there's a great book. It's not one of mine, Advanced in Financial Machine Learning, if you really want to know about this area and what's happening. Okay. one of the problems we're going to avoid is this sort of back test overfitting. Everybody goes, oh, I back tested my strategy and it came to this. Yeah, back testing is bullshit. You know, if we were to promote, for instance, our hedge fund, when we speak to institutions, we're only allowed to market a hedge fund to institutions, not to private investors. Okay, so when we go to an institution, if we said, oh, we did this back testing, you know, it's a criminal offense. Can you believe it? It's a criminal offense to use back testing to promote a fund. People don't realize that. So forget backtesting, because it leads to overfitting, and it's bullshit. Nobody's awake at 3 a.m. to place that trade, and no broker is ever going to let you get in at the level you were secretly supposed to. Okay, so forget all of that. That's not how it works. Now, what we're also going to do is avoid this major problem: good-looking strategies, but bad in fact. Okay, what do I mean by that? Good-looking strategies, the ones which on paper look great, but turn you into a screen slave. That's pointless, all right? Good-looking strategies are the ones which look good on paper, but you'd have to be in front of the screen, precisely entering, and the broker would have to charge no spreads and no commissions, right? Well, that's pointless as well. So we've got to get rid of or all of that kind of stuff when we're trading as well. And let's just remind ourselves of the ultimate goal while we're here. When I was writing one of my books and researching what do the wealthiest traders do, one of the most successful traders do certain brokers. I'm not endorsing this broker. I don't know who they are. It's just something that came out from the research for the book. Okay. And this webinar is not about spread betting or CFDs or options trading or whatever. It applies to all of those things. We looked at the data to dive down into what it is the best traders are doing. Private investors, the 20% that make money. And is there a similarity between what they're doing and what the biggest hedge funds are doing? So we wanted to look to see how do they handle stop losses. So we got this anonymized data from a bunch of brokers, okay, because we wanted to drill down into, is there an edge that they're having for this research? It was partly for my Financial Times columns, and it was partly for the book, you know, to work out that information. Is it that they're doing something with stop losses that they have in common? Is it something that they're doing in terms of the times of day they're trading, how you know, are more profitable traders holding long trades than short trades? Are they holding for an hour or 3 hours? Could you find, for instance, a data edge where you could say, oh, if they hold a trade for more than 3 hours, they're more likely to lose money than make money? Should they be trading long in certain currencies than short? If there was any data on that edge, well, obviously it was data that and an edge that we wanted. I think I've got to show you gold from yesterday as well. I do indeed need to show you gold from yesterday. Anybody who saw the webinar yesterday will know we were also shorting gold earlier. Now this has just fallen off a cliff as well. That's obviously going to be linked to the price of the dollar. But more importantly, this is what we're seeing right now. Now notice how, look, we didn't get in earlier. Well, that's fine, because the higher probability trades happen slightly later. So how do we get that down arrow? And what is that you're seeing on screen, which is all the essence of trading, and that I need to explain to you? Well, that's the stop loss. How was that generated? Why is that over there? Is it because that was a recent high? What is it? Okay, and this is not a profit target. This dotted line is not a profit target. It's where we double down using our profits that we've already generated, because the price got down to there from here, to double down on our position, and hey presto, the market fell. Did we know the market was going to fall? No, we don't have a crystal ball. What we knew is that the market's weak, and therefore if bad news happens, it will fall. Sometimes the bad news doesn't happen, it doesn't fall. Oh well, you know, that's how it is. Okay, we set a trap for the market. We think the market's weak, and indeed bad news happened and it fell. At the moment with Brexit, there's a lot more news, therefore there's more opportunities for market moves. So I want you to get into that mindset. We're not looking into the future, okay, at all. This is how we're doing it, and I'm going to get you into that mindset so you can use it. Now, this is great. You guys are lucky for me, because this is absolutely sprinting lower, if anybody are looking at this. All right, and we'll come back to some more of these as well. How can we do it in a way where I can calmly do a webinar but still have these positions open, because I'm not stuck to the screen? It's make life easier. I know everyone's thinking, oh, but look at that, Alpesh, average profit of the top 100 traders, £100,000. We're not trying to do that. We're trying to do 500 to 1,000 a month and learn the skills. Okay, so I want to reinforce that point before you get carried away with crazy numbers. What we're trying to do is kill a few, it's Christmas time, I know, kill a few electricity bills, energy bills, gas bills. All right, we're not trying to change our lives. We're not going to leave our day jobs. And one of the things we're doing, yeah, look, this is the New York Times magazine. The robots are coming for Wall Street, and this is what's happening. The robots are indeed coming. It is this mechanization of software, and if you're not doing that, don't trade. If you're not doing it, using some of this computing power, don't trade. You're going to get outsmarted. It's harder now than it's ever been. And I'm going to show you the specifics of how you can do it to get into that 20% and keep in edge. Look, it's like anything else. If I said to you, okay, oh, you can use the telephone techniques you were using 20 years ago, forget it, Alpesh. Nobody wants, I can still sell you a telephone from 20 years ago. You'd go, no, you can't. I want your telephone from 20 years ago. And it's a bit like that, okay? So we've got to keep up and progress. So how are we going to do that? Well, let me show you where we've got to next. You can see sort of the section headings. Let me tell you where we've got to. We've got to this bit. This is essentially what we're trying to do. And it's a bit difficult to see on screen, so let me zoom in, all right? So what we're trying to do, we're trying to capture some of these moves, obviously, all right? And guess what? The bad news is sometimes the market, when we get lots of news, goes up and down a lot, and we get wrong-footed, and we make losing trades. Look at that. There were about 1, 2, 3 losing trades and a small profitable, which is not even worth talking about. And then we get the massive big move. Now I might say, Alpesh, how come every single move isn't big? Hey, I wish I could manipulate the market and make every move big. That's not our job. Our job, and equally you might say, well, how come you got into any of the other moves? Well, guess what? When we got in, we thought the market was likely to move in a particular direction, but Donald Trump did a tweet, went the other way. So those things happen. That's fine. We're trying to be right 7 times out of 10. Okay, because we can't see into the future, and those 7 times out of 10 will make enough money. That's the job of it. And the reason we need to use computing power is for several reasons. One is, if you only look at one product, let's say you only looked at euro dollar, you might think, oh, look up, I looked at euro dollar, I made my trade. Yeah, guess what? If that didn't happen today, what if that didn't happen today? What if that move didn't occur? That's why you can't just look at one thing alone. Okay, that's why we need to scan several things. I'll tell you how many we need to scan. Okay, and what time frames and why and how we're going to do it. So we've got, by the end of this webinar, a detailed process, knowing when to buy, when to sell, a process to know, right, this is what I'm going to scan, this is what I'm going to do. So you know exactly where you stand in specifics. That's why I said get a pen and paper ready as well. And one other sort of extra piece of information I want to give you. Oops, there we go. What's the percentage of profitable traders? The data from a major American broker, it doesn't matter. Most brokers will give you the same data. How much money do people have in their account? Percentage of profitable traders. The more money you have in your account, the more likely you can be profitable. Why is that? The reason for that is if you have a string of losing trades, if you've got a small account size, it'll get wiped out. Now, that's not to say you shouldn't start with a small account size, because 20% are still profitable when they've got just $1,000 in their account, and that's fine. I'm not encouraging you to open larger account sizes. What this data is not telling you is actually these people with larger account sizes were using less margin, less leverage. The less leverage you use, the more likely that if you have a string of losses, you won't get wiped out. What it's actually saying to you is, even if your account's small, try and use as least leverage as possible, please, and you're therefore more likely to be profitable. This is the kind of data I like to give people, which is, even if you start off with $1,000 account, you've still got a 21% probability of being profitable. Just use less leverage, okay? All these ESMA regulations, which are reducing leverage, they're good. Anybody who tries to flog you 500 to 1 leverage, they're trying to rip you off. The brokers are trying to steal your money because they know the more leverage you have, the more likely you're going to blow up, and therefore they'll get their hands on your money quicker, because they know you'll have more than one brokerage account. So they're in a race with the other brokerage account to steal your money as quickly as possible. We'll talk more about brokers and how they rip you off later on, okay, in this webinar. Now, we know hedge funds have won big from Brexit bets. How have they done it? Okay, the Financial Times tells us, look at the headlines, and that's why we're here, and that's why I know people are here, and that's what they want to get into. What they've done, look, like I said earlier, we've got 2 decisions to make: when to buy, when to sell. The same 2 prices, the same 2 decisions, the same data as everybody on the world sees. You, me, and everyone else. Never in the history of the world have we had such a level playing field. It doesn't mean we're all going to make the same billions, because Trader 1, buying at the same time as a George Soros, might only make £500 because they've got less capital. Okay, Trader 2 is a wealthy trader. He's got a bit more money, will make £5,000 from the same trades, even if they buy and sell at the same time. Trader 3, a professional fund manager, will make $200,000 because they've got more capital, and a Soros will make $1 billion because they've got even more capital. What we've got to make sure is that the only difference between you, me, and the big funds and the super rich is the amount of capital we have, not that we didn't know when to enter and when to exit. We're all trying to, in this level playing field. That's why, and I want you to write this down, trading is the most entrepreneurial business in the world, because you don't need an office, you don't need lots of computers and staff and all that fixed cost that comes with it. Okay, that's why trading is a phenomenal entrepreneurial business. You can switch it on and off whenever you want, and there aren't warehouse costs, there aren't delivery costs, there's none of those problems that we're seeing, we're worried about with Brexit. Okay, all these worries that we have with Brexit don't apply. Fixed borders don't apply. You haven't got warehousing and trucks and all the rest of it. That's why I love trading, because it doesn't care about any of those things. It just carries on regardless, because it's efficient. Okay, and if you're looking for a side income, I think it's the best in the world, because you don't have to put a big capital outlay either, because you can start with a demo account. What we've got to break it down into, therefore, is, well, what is trading then? What are the essence that we need to cover? We need to know where to put the stop loss. This is the acronym. I need you to remember where to put the entry. How are we going to work that out? How do we do it using some of this computing power? Okay, where to put a limit order. We're never going to use those except in very, very circumstances. Limit orders are take profit orders, because we want our profits to run. We don't want to cap them. You know, people go, oh, I use risk-reward ratios, Alpesh. Bullshit. Anybody who's told you about risk-reward ratios, they're idiots. And the reason they're idiots, my friends, okay, the reason they are idiots. By the way, if you've got any questions, put them in the chat box, not in the request to speak bit, because the request to speak doesn't work. Put it in the chat box. Ask me any questions you've got, okay, in the chat box at any point, because then I'll be able to answer those questions as we come in. How do we avoid that psychology of, oh, I'm going down 1 second, up, the market's up the next? Look at the ups and downs that we're seeing because of Brexit. And that's why Brexit's brilliant in a way, because it's giving us all of those issues in one go. Look at this with Barclays. All right, I'm more than happy to have shorted Barclays and now be long. What? Within 24 hours? Am I a psychopath? Am I schizophrenic? No, because that's the nature of what's happening at the moment. So we profit from that, we profit from this, as opposed to it just going sideways all the time. That's why it's an advantage. But that requires trading psychology. Well, how do we do it? Well, we rely more on computers, because it means that we don't have to take the strain. How do we decide how much money to put into a trade? I'm going to show you how we need to put the least possible, not the most, the least possible, so we make a bit. But Alpesh, surely if there's a magic holy grail, we just mortgage our house and put everything on that. No, that's not how real trading works. If you do that and you get it wrong, guess what? You're wiped out. I wish the world's leading traders had said to me, no, Alpesh, you know what? Here's a little secret holy grail. That's why I went to meet them, with the secret bloody holy grail. None of them said there is a secret holy grail. They instead taught me how to trade, and I set up the hedge fund, and it worked. Okay, I'll share that with you. What they said instead is not that, oh, there's a secret strategy and you put everything into it and you make loads of money. That's what those people flogging you courses are trying to tell you. It's bullshit. What it is instead is you make a little bit, a little bit, a little bit. It's a bit like I said, you're going to buy a rental property and you're going to keep getting income off it. It's not that you're buying a lottery ticket and there's a guaranteed secret strategy of winning. And then we're going to see how to add to those winning positions as well. And what we're going to use with all this is we're going to use trend following, okay? Because those are the easiest hedge fund strategies for private investors to use. They're the simplest ones to use, okay? And look at this. Computers are beating their highly paid human counterparts so far this year. This is 2016, because that's the headline I've got. We've got to use the headlines when Financial Times uses them, okay? And that's when my mentor, Bill Lipschutz, was Hedge Fund Manager of the Year. And this is Bill. There's a picture of Bill there. You can see him. Here he is, picture of Bill, who was in my book, Mind of a Trader. There you go. In that book, Lessons in Trading Strategy from the World's Leading Traders. His chairman was Warren Buffett at the time. And Bill, okay, Bill, there's a few of you who can't log in, I'm afraid. I'm not sure why. I apologize if you can't log in. Okay. Bill was global head of foreign exchange at Salomon Brothers. You know what that means? He was the world's largest Forex trader. And he became my mentor because of the book. And he was one of 10 leading traders that taught me how to trade. So I'm going to share that information with you. And what we need to share now, what we need to get into, we've done the generic sort of top down as to why I'm doing something. Now I need to share with you, okay, well, how do we get the specifics? How do we know the inputs in our little algorithm in our head that we can manually work out, right, that's going to fall, okay? How do we work out not just that, but where's the stop loss? Where do we know when to enter? And where do we know how to double down in a position? All right, so how do we do all of that? And that's what I want to do now in the webinar. We're about halfway through it, so that's the bit that I want to deal with now. Now, can I just say, if I promise to give you great content, do I have your permission right at the last 10 minutes, and you don't have to stay for the last 10 minutes if you don't want, okay, to tell you about the technology my hedge funds created. I want to talk a bit about the hedge funds, something I've talked about on CNBC, Bloomberg, BBC, okay, which I love. Can I tell you guys right at the end, okay? So I'll repeat what I've said on the BBC and on Bloomberg and on CNBC. And if that's okay, can I get your permission? The last 10 minutes. And the reason I say this is sometimes people say to me, oh, you talked about yourself, you bastard. All right. And I don't want people to say that. All right. So that's why right at the end, can I do that? So where are we? Where we've got to? We've got to this bit in the webinar. Okay. the biggest trend following hedge fund managers, the why we're going to look at trend following is because private investors can do it. This is what got me into trading. It's probably the easiest of the strategies. Of all the strategies out there, it's the easiest one for private investors to do. You know, there's a lot of complicated ways of trying to trade. We can't do the complicated stuff. And don't worry, this is still neural networks and artificial intelligence, all the rest of it, but we're going to do it this way, and private investors can do it. Okay. Out of this list, my favorite is David Harding, because he's British, and he runs Winton Capital in Hammersmith in London, West London. But also, he was one of the founders of something called AHL, which was part of Man Group, and is one of the greatest trend following hedge funds in the world ever, well, in history. Okay. And it's because people, professionals, this is the one area where it overlaps between what professionals do and what we can do as private investors. Now, don't get me wrong, I want to get you away from this. This is how, the humble truth is, this is how trading was for me. Okay, until I spoke to, I didn't work it out myself. By the way, I didn't work anything out myself until I spoke to some of the best people in the world at it and published it in the book. Okay, so the proof's out there. Alpesh, you didn't do it yourself. You've even said it in a published book. You didn't do it yourself. Other people taught you, and that's all I'm doing. I'm doing what they did to me. I'm doing for you. It took me a lifetime to get to hanging out with the royals and all the rest of it and showing off. Okay, I don't want you to think success is overnight, but I want to compress your time to success, because that's the whole point of using a mentor, using somebody who can teach you, is it compresses your time. You might go, well, why are you teaching us this? The exact same reason Donald Trump does the apprentice program, billionaire, the billionaire Lord Sugar does. Here's the billionaire Warren Buffett wrote his book, the billionaire Michael Bloomberg wrote his book, telling people how to make money. It's no skin off my nose. It actually raises our profile of what we're doing as well, what we're doing as a fund, what we're doing in the technology world as well. What we're going to focus on in this, these are the magic numbers. 15 minutes a day or 1 hour a week, I want you in front of the screen. Now, why not longer, Alpesh? Well, you can be longer if you want, but I think if you're spending longer, I sometimes get worried that people are not getting a good return on time. Okay, 1 quality trade per day or 5 per week. Now, you might say, why not more, Alpesh? You can do more, but I'm going to show you mathematically why this will be enough. We're going to target 100% annual return. And you say, what? That's ridiculous. That's not my number. That's Bill Lipschutz's number. Don't believe me. He's written it in the book. The reason he said that is private investors can take a bit more risk than an institution can. As an institution, I'm not allowed to take more risk. The regulator won't let me. The investors, the pension funds won't. Aegon is one of our investors. It's a pension fund. They'd shoot me if I took more risk to try and get 100% return. Okay, but as a private investor, you can take a bit more risk. You can get a bit more return. We're going to look at about 12 to 20 products. My best time frame is the 1 hour time frame, because you get a signal on that about once every 2 to 3 days. And that's good if you've got a day job. So at any given time, when you're spending 15 minutes a day scanning these 12 to 20 products, and I'll tell you which ones I think are good, but actually anything which isn't highly correlated. And you want things which are not just, say, currencies or indices, because guess what? You want to be diversified. You want to have lots of choice. The secret to success is a choice when it comes to quality trade. So you don't just want euro. You don't just say, oh, Brexit's here, so let's just do the euro trade. No, the euro trade's great. It's falling off a cliff. Look at that. It's falling even further. You guys, I mean, you're watching this live on air. So look, one spot, 12.69 is the spot rate of euro dollar. You're watching it live on air, as I said. So you can see it's going short. Now, we had the short trade there. And if you watch the webinar, you see, you know, we did this and we're making money. The point is not, oh, wow, Alpesh, aren't you amazing? No, this is bread and butter. It's like saying to a footballer, oh, you scored a goal. Wow. No, you don't applaud somebody for doing what's their day job. The point is, well, how did we therefore come to the more important things, which is, how do we know entry? Remember Selma, how do we know to put the stop loss there? What if we're not going to be at the screen? Well, we have a trailing stop loss. So as the market drops, it'll take us out. And if we are at the screen, we'll exit when the momentum is no longer there or the trend is no longer there. How do we work that out? I'll explain that to you. What the hell does all of this mean? Okay, that's the stop loss there. And at this level is when we double down in the position because we've got some profits. So we risk profits to make more profits. We don't want to risk our capital if we can avoid it. We want to risk more profits. And that's just one of several trades. And we want to look at not just euros. We want to look at, like I said, DAX, US equities, so that we've got a diversified group. And ideally what we want to do is we want to be long euros, let's say, or short euros on the 1 hour time frame, but we want to be long euros on maybe the 30-minute time frame. So we're hedging, so we're making some money in the long term and short term. And a classic example of that, and I'm covering so much material, don't worry, I'll go back through it, is with Amazon. Okay, I've got a long-term holding in Amazon. So if I get a an opportunity to short it, that's great, because that pays, that profit in that fall in price has paid for my long-term holding. My long-term holding I'm going to hold for the rest of my life. I'm going to pass it on to my child. So every time Amazon's price falls, I still make profits from that. And every time it rises, guess what? I make profits from the long term. That's hedging. That's how smart money does it. That's why they're called hedge funds. That's why they get paid the big bucks. Okay. And we'll talk more about any of this that I'm touching upon later on. If you've got any of these questions, so don't worry about that. I'll go through it. But the critical factor is we're going to leverage, computing power. And I can't mention this enough, because it's not just me saying it. If you're not following it, you're not keeping up. Look, Financial Times, robot or human, which is the best wealth management? It's coming. It's already been going. It's been going for a couple of years now, guys, and you're going to get left behind if you're trading without computing power. So we're going to try and use more of this free computing power that's already out there. Don't worry, so much is out there. We're still going to do it as much as manually. We're not going to just put it on autopilot, because I don't like self-driving cars. We're going to do it in a non-manual way, so that we can, if we're wrong, look at that. Alpesh, you mentioned wrong trades? Yeah, doesn't matter. That any losing trades in a good strategy should be short in duration, okay? Small in size losses and short in duration. And winning trades, they should be following into the trend and running with that trend and doubling down into that trend, not having profit targets and capping profit. If you found oil in your back garden, you wouldn't put a cap on it and say, let me look in somebody else's garden to look for more. No, if you find it, you keep drilling down low, and that's what we're going to do. So we've got two more parts to this webinar that we need to go through. The first part is the business plan. How much money can we make? And the second part is what's the strategy to wrap it all up in the specifics and tie everything up into a nice little bow tie of, well, how do we find those entries? How do we find those stop losses? So the first question is, how much money can you make? And we've got to decide if this is for us anyway, because at the end of this, you might say, yeah, Alpesh, that's not really enough money for me. Thanks a lot. Trading's not for me. And that's useful information for you, okay? I want everybody to go, oh, yeah, we should all be trading. That's not the right answer. It should be, let's work out how much return you can make first for your particular circumstances. So let's work that out. And the reason there's a picture of me driving is this. Trading is like driving. First, it seems complicated. The clutch, the brake, the accelerator. Okay, now we've got some trades of a lifetime, right? But if you don't know, like with driving, if you don't learn the skills of where do we put the clutch, i.e. the stop loss, when do we use the brake, i.e. double down in our position, or the accelerator, double down in our position, the brake, i.e. the stop loss. Okay, the clutch and the gear shift, which is when to enter, and the steering wheel and the rear view mirror, all the rest of it. The rear view mirrors, how do we enter the trade? Oh, sorry, I'm dragging this analogy a bit. The point is, we don't learn those skills. These trades of a lifetime that we're seeing at the moment, and they're trades of a lifetime because we're getting bigger moves more frequently. What does trade of a lifetime mean with Brexit? Bigger moves more frequently. Bigger moves more frequently is what all traders are after. They're happening more at the moment because of Brexit. You don't need me to tell you that. Okay. So how do we capture that? What are the skills and how much can we make? Is it worth doing? Okay. Well, the skills we're going to use is we're going to be trend following, because as private investors, it's the easiest way to do it. Like I said, whoops. Where's he gone? Where's he gone? Come on, Patel. We're going to be trend following. What does trend following mean? See that guy on the coattails there, momentum trading? That's us. We're the small guy. We're riding the coattails of a move that's already happened, which has happened by somebody else. Somebody else makes the big move. We're not going to stand basically in front of the markets. We're not going to try and guess the move. We're not going to try and forecast. We're not going to say, oh, this is what's going to happen. There's going to be a hard Brexit, or Trump's going to be impeached, or whatever. We're not going to try and do that. We're going to wait for something to happen, then we're going to follow that trend. And that's what you've seen. Okay, all day here, all you're seeing is, not with me looking at the news, look at this. I haven't in this webinar said to you, oh, guess what? Juncker has said this. Now, some of you might be looking on the news right now. You can Google the news. There's a reason the euro has fallen. All right, I can probably guess what it is. Maybe somebody in the European Union has just said, oh, there's probably going to be a hard Brexit. We're preparing for it. All right, I don't know. Doesn't matter. We're just trying to trade the trends. When I was on the BBC this morning, I talked about the news. That doesn't mean I'm trading off the news. I'm trading off this stuff. As they know, when I'm on Bloomberg, when I'm on CNBC, I'm trading off the trends because the computers are more reliable than my emotions and my second guessing the market. All right. And if anybody's interested, I was a Remainer. Okay. In case you think, oh, maybe he's fanatical, he's got a agenda. I don't have an agenda. What I have an agenda is to make money. So the way we're doing it, and the way I want you to do it, is we're going to trend follow, because that's easier for private investors. How the hell are we going to do that? Okay. And why? Why is anybody telling us this? Well, I'm not the first hedge fund to tell people how to what they do to make money. In fact, every time we go to pension funds, family offices, sovereign wealth funds, to raise capital, we've got to explain what we do. You can't just have a black box and say to a family office, oh, give us money. We've got a magical black box algorithm system which works. You've got to explain in detail what you're doing. And you might think, well, if you tell them what you're doing, why don't they rip you off and just do it themselves? Well, the same reason my plumber tells me what he's doing doesn't mean I'm going to bloody well go and become a plumber, or my accountant tells me what he's doing, or my bookkeeper does. You still want somebody doing it for you, okay? So I'm not the first, I won't be the last to demystify how trading works. So let's work on the last two parts of the webinar. One is the business plan, and then the strategy, which wraps everything nightly into a little bow tie. So in the next 30 minutes, first, the business plan. Now, I know I've written FX, actually it applies to everything. That's my mum, always makes a visit on all my webinars. Okay, and this is the business plan Bill Lipschutz gave me, global head of foreign exchange at Salomon Brothers, completely changed my life as a result. And he said, look, when we're trading, like I said, it's a bit like driving. First thing we need to do is set up our risk capital. It's not about how much money you've got today. It's how much money, if you get a good track record over the next 2 years, will you be able, through friends and family, to get your hands on? Because today, I don't want you starting off with $20,000. Too risky. I want you to start off with the least possible, actually a demo account. And then when you get a track record, as I did as a student, then friends and family will throw money at you. So don't worry about, oh, Alpesh, I need lots of risk capital. No, you don't. Okay, we're going to set our risk capital, therefore, based on where we will be in our business plan. A business plan looks in the future. Where will we be? All right. And then the first thing we're going to do, Bill Lipschutz said to me, is we'll work out what the maximum loss is. Yes, loss is what's important. If you can control losses, then what's left is just profits. So he said on any one trade, the maximum loss will be 1% of our total capital. Assume in 2 years you've had a good track record, because I'll show you the strategy in the next session. So you get a good track record and you get a total capital through thanks to friends and family, or I don't know, maxed out credit cards. No, not maxed out credit cards. Total capital of £20,000 or $20,000. I know some of you are from the US and different parts of the world, Singapore, Canada, and so on. So let's say £20,000 or $20,000 is your total capital. So the maximum loss per trade will be £200. 1% of 20,000 is £200. Let's assume you get proficient, you learn the skill, so you're right 70% of the time. Actually, I'm going to show you later why that's irrelevant, but you're right 70% of the time. So you're right 7 times out of 10 on average, okay? You're wrong, therefore, 30% of the time, okay? Because Donald Trump does a tweet, markets don't always move in your direction, and that's perfectly fine. You're wrong, and I showed you some losing trades earlier. So you lose that £200. 1% of 20,000 is £200. When your stop loss gets hit, you lose £200. But we're going to pick a strategy, like I said, when winners add to winners. I'm going to pick a strategy where we make more money when we win than we lose when we lose. That being the case, the average win will be £300. Why? Well, because we're going to pick a strategy where we make more money when we win than we add to our winners. So let's say you do 100 trades. So Bill took me through this when I was at university and getting ready to write that book, Mind of a Trader. And I wrote all this down and I went, oh my God, that means 70 trades are going to be making £300 profit. That's £21,000. I said, Bill, tell my parents I want to leave university. I got so overexcited. And 30 of those trades are going to be losing money. But still, I said, Bill, look at that. That is just nuts. Tell my folks I want to leave university. All I want to do is trade for a living, because look at that. Net profits, £15,000 per 100 trades. I went nuts. I went absolutely nuts. And he said, well, wait a minute, Alpesh, you're still going to have to find a strategy which allows you to do 100 trades per day. And he hadn't at this stage given me any strategy, and I didn't have any strategy at that point other than a hodgepodge of guesses that I'd made, as most of you will have done in terms of the markets and reading the newspapers and trying to forecast. And so I said, yeah, well, you give me a strategy, won't you, Bill? You're super rich. Why wouldn't you just give me one? Come on, I'm writing a book making you famous or more famous. Or I'll just keep my day job, won't tell my parents I'm leaving university, and I'll do 100 trades per month, because look at the math. And then I went through the maths of it, got overly excited. I said, if I'm a day trader, I can do 100 trades per week, 50 weeks in a year, because the other 2 weeks of the year I'll be on my yacht. I don't have a yacht. Okay, that's 5,000 trades per annum, Bill, right? That's £750,000 per annum based on £15,000 profit per trade, because I'll just tap away on my keyboard all day long, sitting in front of a computer in my underpants, eating nachos and trading, and that's what it'll be. That's the dream. And he said, don't be stupid. And I know what you're all thinking, and you should be, which is, Alpesh, we're not going to do 90% of that. We're not going to do 3/4 of that, 2/3 of that, a half of that, or even a third, a quarter, a fifth, or even 15% of that. Okay, let's say this business plan is way too over optimistic and we only hit 10% of it. Okay, that's £75,000 a year, but that's still too over optimistic, because £75,000 a year is way more than I said. Our target is 1,000, well, 500 to 1,000 per month is our ambition. 500 to 1,000 per month. Okay, 500 to 1,000 per month 1K per month is our target. So 75,000, 10% of this is too overambitious. So let's tone it down. Let's say we keep our day job. We don't become day traders. And instead of doing 100 trades in a week, we just do 100 trades per 6 months. You know what that is? 1 trade a day. Like I said, just because you've got all this on screen doesn't mean you've got to try and bang away on the keyboard doing all of it. Okay, let's say we pick 1 quality trade a day. Instead of every single trade, we just do 1 quality trade a day. All right, okay, fine. We'll do 1 quality trade a day, which is 200 trades per annum. Well, hang on, 200 trades per annum at £15,000 per 100 trades is still £30,000 per annum. So I know that's less than half of 10% of the business plan. It's about 4% of the business plan, but it's still almost 3 times more than our target of 1,000 per month. So even if we're doing 1 trade a day on this business plan, we're still over optimistic. Okay, in other words, it's a good business plan, because if we do less than 4% of our business plan, we're still hitting our target of 1,000 a month. So that's fine. This is worth going down. It's worth starting today, even on a demo account, on the basis that in 2 years you'd be able, if you just hit under 4% of this business plan, be able to hit your 1,000 a month. Actually, in 4 years, you should be able to hit 30,000 a year. Right? What we're trying to aim at is a 500 to 1,000 a month within a few weeks of today. All right, and then we'll build up in the next 2 years to 30,000 a year. Right? Well, the first question you've got to ask yourself is, well, okay, if these numbers are true and £30,000 per annum is true, how come everybody isn't rich? Because that's what I asked Bill, and it's what you should be asking me right now. Okay, Alpesh, these numbers are true. How come everybody isn't rich? So I asked Bill that. And Bill Lipschitz said to me, well, the key reason for failure are bad teachers, of which there are loads, bad mentors, same thing in a way, of which there are loads, these trading institutes, trading academies, and all the rest of it. Why aren't they busy running bloody hedge funds? Okay, raising more capital. 90% of my time is spent speaking to family offices, raising more capital, because we love what we're doing, raising more capital. Okay, from family offices, from pension funds, right? Not running running education universities, all right? And the third thing is bad strategies. So let's focus on bad strategies. In fact, let's focus on the final part of the webinar, which is what's the strategy then to get into this? And remember, just as a recap, there's my mum again. Just as a recap, it's not £30,000 per annum that we're aiming for. Remember, it's just 1K per month is our goal, 500 to 1,000 per month. Okay, so when I show you next the strategy, it's based on that target, because if you learn the skills, you can then scale up with more capital. And then your issue should just be, all right, how do I find more capital? Well, with a good track record, friends and family. But the point is, let's learn the skill first. Then you can just simplify your business model into scaling up with just working out more capital. So on the final part, let's look at the strategy, and then we'll recap absolutely everything. Okay, so that's where we've got to so far with the webinar. We're now up to this point, the final bit, which is that bit. So I said to Bill, well, give me a strategy, Bill. And he said, look, for a private investor without much money, the best strategy is going to be momentum based, because it's easier to follow for private investors. It might not be the greatest strategy in the world, but for private investors, it's going to make you enough money. Okay. And I said, well, what do you mean momentum? How do I measure momentum? He said, look, the way you measure momentum is you measure how close to the high the price closes in any given period. Okay. You measure how high it closes, how close it is to the high. And I said, why? Because, well, the closer it is to the high, it's a bit like those TV auctions. I've got 30, anybody give me 40. I've got 40, anybody give me 50. I've got 50, anybody give me 60. The closer it closes to the high, the greater the probability the next period it's going to move up. I said, well, that's all very, and therefore there's a trend. And trends work. And I said, well, how am I going to do that? What, with a magnifying glass? He goes, no, we're going to use computers, of course. Okay, I said, well, how do I know any of this works? And he said, well, there's no certainties, but hey, look at this. 20 years after I first met him, trend following hedge fund strategies lead performance 2016, computers beating, like I said, in the FT. He was hedge fund manager in 2016. Okay, so for 20 odd years, we've had a bloody good track record, all right? So I said, well, tell me the strategy. So let me share the strategy with you. These is what goes into our software, what goes into the algorithms and the artificial intelligence part. These are the elements we look at. He said, what we're going to look at is what's already freely available out there, because you're a poor student, he told me 20 years ago, and it's true. As a poor student, he said, we're going to look at what's already available. There's many indicators which are available, which measure is the price closing near the high. None of them work all the time, so we're going to look at them in a way the textbooks don't look at them. We're going to look at them the way all hedge funds look at every strategy, which is, first of all, we're going to look, because no one indicator works all the time, at multiple indicators. So we're going to look at things like the MACD, stochastic, RSI. We're going to look at multiple indicators. No one indicator works all the time, but that's not the only input we're going to have, and they're going to weigh them just like any artificial intelligence system would. All right, look at this. Okay, that's what was the essence of that, and that's what all of this represents. But that's not enough. That won't be enough, because that would have been enough 20 years ago. It's not enough today. So what we're going to do is we're going to look first at multiple indicators. No one indicator works all the time, so we have a triple filtration method. What the hell does that mean? Where we're going to look at multiple indicators. Are all multiple indicators suggesting the market's going to rise or fall? How do we know if they're going to suggest the market's rise is going to fall? We don't look at the way the textbooks look at them. We're going to look to see, are they flat to rising? Okay, so are these indicators, which all measure is the price closing near the high? Okay, they look for that pattern. They look to see is the price closing near its high, and therefore there's a likelihood it's going to move up. Are they flat to rising? So we look at multiple indicators, because no one indicator works all the time. And are those multiple indicators flat to rising? And we use them in the way textbooks don't. Are they flat to rising? Okay. Secondly, we don't just look at one time frame, because we know one key reasons for failure is that we need to look at different timeframes. We need to see, are those multiple indicators flat to rising in multiple timeframes? We then program all of this into our little algorithm. So we don't do it manually. The computer does it, but I'm showing you the manual rules so you can do it manually if you wish. Multiple timeframes. Are they flat to rising, not just in this time frame, but are they flat to rising in the next time frame along? Whoops. So let's look at some of the live trades that we've got going on at the moment. Okay, let's look at the Barclays one. All right. Is it flat to rising, not just in this time frame, but the next time frame along? Look how we didn't pick the bottom, because the higher probability trade is here, but that's made us enough money. I don't mind. Okay, it's when you try and get greedy and you bottom fish that you lose the most money. Don't take my word for it. Leading traders of the world will tell you that. Anybody who tries to tell you a system where they're picking the bottom, well, presumably they know witchcraft and have a crystal ball. Okay, it's that bit. It's that bit there that we're looking at. Right. So multiple time frames. We're not just going to look at the time frame we're trading. If it's the 15-minute, the next time frame along, manually, that's what there's a higher probability the market's going to move up. And that is the source, as it were, the secret source. What I did, I'll show you how to download it as well if you don't want to do it manually. Those are the manual rules for those trades of a lifetime that we're seeing at the moment, which allows us to find them and use them and execute them. So red carnation means last exam. So I did that 20 years ago with Bill Lipschutz when I was at university. Okay, perfected the strategy. Won awards, used it. This is me on the business section of the Financial Times. Won awards, Patel Top FTSE 100 forecaster. Okay, won awards to do that. And that's what helped me then set up the hedge fund. The Financial Times said, look, will you write a weekly diary of your trading? Because you're good. I said, yeah, of course, because it'll help me raise my profile. So I did the weekly diary. And then big banks started licensing this technology. So Merrill Lynch, HSBC started licensing it. Basically them, American Express, Barclays, they paid us about $1 million in total, all these, which is what allowed me to set up the hedge fund. That's me back in 2005, having set up the fund in our first set of offices in Linden Hall on Regent Street, because we couldn't afford even $1 million, because that's how much it costs in terms of custodian banks, lawyers, accountancy fees, all of that cost. We couldn't afford flash offices, so we were in Linden Hall and Regent Street. And that's how the story came about. I'll show you how to download it. Don't worry. A lot of people saying, how do we use this? Okay, and that's what allowed me to then use that to get onto Sky, BBC, CNBC, Bloomberg. Had my own show on Bloomberg because we were using that technology. And now I promote this whole technology side of trading. That's me recently at a massive convention in India talking about innovation, entrepreneurship, and technology. And that's why I was at Downing Street, because it's the financial technology part which we're finding is incredibly, incredibly important. And what we found is, if you're trading, you can, of course, do it manually. But if you're trading without an indicator, this is what's happening. We put all our algorithms, all our information into one particular sort of super algorithm, as it were. Now, you can do it manually if you want. If you're doing it manually, it's like this, right? What we realized is that when people are trading, and we think the only way really to trade now for private investors to be successful at all, like I said, is to be able to monitor multiple products simultaneously, okay? Because if you can't monitor enough, you won't get enough choice, and you'll be a screen slave and you won't make the return. You just won't make the return, all right? So, and then wait and have the computers do the hard work, and the inputs into that were multiple indicators, multiple timeframes, price confirmation, pattern recognition, and that's what the artificial intelligence did, and works it out, and it scans, by the way, it scans every single one of these currencies across every time frame, all of these stocks, Ferrari, GE, Goldman Sachs. I mean, we limit what we look at, because otherwise you'd be looking at too much stuff. You can't. There's not enough capital in the world to keep on looking at absolutely everything. Okay, so what we do is we limit how much we will focus on, because you look at 12 to 20 different products. But if you've got an algorithm, you've got an indicator, this is what trading is like with an indicator. You're able to look at more, you're able to look at those 15 things and then narrow it down. So trading has moved on. Okay, that's my point. So we gave people the indicator to do this, and before the indicator and after, to see actually, does it help them? Is it helping them? What we found is after an indicator, they had a greater confidence in a strategy. They had lower stress over losses. Okay, they had a business plan for long-term profits because we gave them the business plan. They had clarity of exits because it tells you when to exit, clarity of entries, and clarity of stop losses. This is where it moved on. So, okay, so whilst I'm saying you should do trend following, whilst we should have stop losses and all of this, if it's not using computing power, you're not going to have enough. You can do it manually, but you're not going to have enough to be able to do it. Now, before I show you how to download it, if you want to download it, let me just recap some of the manual rules. Okay, one of the things is the stop loss. See that stop loss line there? That stop loss is based on two secrets of all hedge funds. Secret number one, right? Very important. Secret number one of all hedge funds is stop losses are volatility based. Okay, so let me write that down. One, volatility-based stop loss. What does that mean? The more volatile the market, as in the moment at the moment with Brexit, the further away the stop loss. If the market's more volatile, you put the stop loss further away. So what do you mean by volatile, Alpesh? What I mean, you see these moves that you have in every period, that's noise. That's just how much it naturally moves up and down in each period. If that's 20 points, you might put the stop loss 40 points away. If that's 40 points, you might put the stop loss twice as far, 80 points away. Aha, I know what you're thinking, but the stop loss is further away, Alpesh. Surely that means we're going to have bigger losses if the stop loss is hit. No, because we have volatility-based position sizing. What does that mean? That means the further away the stop loss, if it's not there, but it's actually twice as far, then you halve the position size instead, so you don't risk losing more money. The genius of that, and this is what the wealthiest hedge funds told me, and that's what they said time and time again, what we use in our own one, because when we're raising capital from institutions, they say, what's your stop loss mechanism? And if it isn't based on this, they won't give you money, basically. What we're able to explain to them is, well, it allows us to start small because we know we're going to add to our winners, okay? Because see that distance from entry to stop loss, that's the same as distance from entry to where we double down in our position. Okay, and by the way, if you're looking for what that number is, it's there, add. And if you're looking for what that number is on stop loss, it's here. We've got our computers to do the hard work for us. Okay, and the point is we'll double down on our positions here and double down again there, but here we'll have the stop loss. But in order to get these opportunities, we needed the algorithm to begin with. Like I said, you can do it manually if you wish, but trading has moved on. If you don't do it using computing power, you're not going to have enough choice. You're not going to be able to hedge, and you're going to be stuck in just doing what this guy is doing instead. So what I'd say is we want to use computing power. Now, like I told you, I said, if I promise to give you great content, can I in the last 10 minutes tell you the technology our hedge funds developed, which is why we think the trading has moved in this direction. Remember, trading has moved in the direction of using multiple indicators, multiple timeframes, price confirmation. None of that changes. We then put all that technology into something, because we use this technology then to train up our own people in the hedge fund. You know, we get people straight out of school because they're cheaper to hire to do the trading for us. And we created some technology. And then I thought, hang on, technology companies are worth billions. Why don't we spin this technology out of our hedge fund, get venture capital investment, IPO it, make it into a Google of trading? Because Google is an algorithm which searches the internet looking for information. Okay, well, this is an algorithm which searches prices. Okay, and we called it Project pipspredator, which is our sort of super algorithm, our super indicator, okay, which incorporates all those other indicators, multiple time frames, pattern recognition, all that AI, all that artificial intelligence, and it tells us buy when the price goes above the horizontal line, because that commands this price momentum and the odds of a probable move have increased. I told my team, put this into a super indicator, put everything that I've taught and said, because that's the way trading goes. So that way I can get the indicator telling me. So whilst all this data is live, real time, and free from any broker you want, it's called MT4. This indicator we put in because we said this technology is worth billions. It's like the Google of trading. It can alert us on the phone if we wish, but I don't want it to send us alerts. I'd rather look in front of the computer screen for 15 minutes a day and place that quality trade and then move on. Okay. Like this with Barclays or whatever. That is the pipspredator. That is an indicator, which is an algorithm which looks at multiple indicators, multiple time frames, okay, and price confirmation, and says, right, buy now, and then tells you the stop loss, tells you when to add to the profits, saves a lot of time, does the pattern recognition as well, and allows us to look at 15 to 20 products. Otherwise, we'd be only looking at one because we'd have to do it manually. right? And then what we found with this is the best time frame to trade. The reason I said the 1 hour time frame is this: it gives us about 25 trades. These are actual trades we place, not back tested, but theoretical ones at 3 in the morning, which nobody does. We're talking about actual trades. Okay, the number of trades in a month. Now, we don't want to do too many because then we'd have to put too little capital in each one, and that's no use. We don't want to do too few because then we'd have to put too much money. And what if the trade went the wrong way? Okay, so what we did is roughly about 1 a day, 25 trades in a month. Okay, on the 1 hour time frame, because that's how many signals we'd get. It's probably going to be, and it would some months be 40 trades in a month. Like this month, it's going to be 40 because there's just so many good trades. And some months like August, when it's quieter, it might be as little as 16 trades in a month. Okay, the net pips captured, that's winning points minus losing points. Okay, winning minus losing. Net pips capture was 2,250. But look, hang on. Some months it might be as high as 4,000. Like December, it's definitely going to be 4,000 because the trends you've seen so far, it's just phenomenal. Okay, thanks to the volatility of the market. Some months like August, it might be as little as 0 because your winners wiped out by your losers. Okay, so the month you make more, you keep for the month you make less. All right, and that irons out. That's the aim, to iron out your ups and downs, and that's how private investors should be targeting 500 to 1,000 a month. Our best winning streak was 70 right trades out of 100. Our worst winning streak was 30, because like a coin toss can have winning streaks and losing streaks, so can a trading strategy, which is net positive, but it can still have winning and losing streaks. Our typical maximum loss on any one trade. Don't worry, I'll show you how to download it. Barry, Michael, Marcus, Kieran, I'll show you how to download it in a second. Okay, typical maximum loss was 50 points. What does that mean? That means the typical maximum amount of money that we lost in any one trade where the stop loss got hit. Now, let's say you did a massive $2 or £2 a point. Don't. That's too high. That's way too much. I get emails from people promoting their software saying, oh, yes, if you did £10 a point, you'd have made this. Jeez, really? Too much risk. Okay, but just bear with me for 1 second. Well, you would, because there's too much risk, because you would have lost £100, 2 times 50, or $100 on any one trade. That's too much for a private investor. But bear with me just for 1 second. 2 times 2,250 in a month would mean that in a month you would have made £4,500. Well, hang on. I said our target is 500 a month. It's 10% of that. Because our target is 10% of that, i.e. 500 a month, not 4,500, it's not £2 we can afford to do, it's 20 pence. And there are brokers which allow you to do 20 pence a point. And it's not spread betting or CFDs. You can translate any trade, whether it's futures or options, into pounds or pips per point. Okay, 20 pence a point. 20 pence a point means you're risking £10, not £100 if you're wrong, to make your 500 a month from your 25 trades in a month. Those are numbers which we knew, yes, this is mass market relevant. This is relevant for private investors, okay, who have got limited capital, and therefore this is the Google of trading. This is potentially $1 billion technology company. And we stole the idea from a hedge fund manager called Jeff Bezos, who used to be a hedge fund manager at D.E. Shaw, who then went on to set up Amazon, a technology company, and became the world's richest man. In other words, he made more money, not being a hedge fund manager, but being a technology company. So we spun this out of our hedge fund as our own technology, because we said, you know what? I know, Jeff, there's a lot to take in. I'm going to show you how to download it all in a second, so don't worry. It'll give you ability to review. And the answer to your question is yes, but keep watching. Okay. Rakesh Sharma, this is what he did. All right. 193 pips, 48 hours, $1,930. That's the goal. That's the end goal of what we're trying to do and achieve. But you know what? Let's look at the ugly trades. The losing ones are the ones we want to know. This is Seb Croft. Okay, £4,200 in 4.5 days, 210 pips. What did Seb Croft do? Had 3 losing trades. Market kept going up and down, and then had the winning one. Even if you're right only 25% of the time, you should be able to make sufficient that when you're right, you make far more than you lose when you lose. Okay, so ugly trades. Yeah, I'm going to show you losing trades. All losing trades should look like this. They should be short in duration, small in size. Why? Because that's a decent strategy, because it's trend following. So if the trend isn't there, of course it should be short in size, small in duration. This is all based on multiple indicators, multiple time frames. Our algorithms looking at pattern recognition, but then something happened in the news, didn't work out, and then it did work out, and bosh, and you still made 4,200 in 4.5 days. Obviously, he's trading a larger size. Why? Well, because he's confident. He's used to it. Okay, I won't go through all of these trades, but the point is that that's the behind it. That's what an algorithm does. That's what trading has moved into. And good trading strategies should be such that when you get the signal, there's ample time in which to enter. You don't have to be in front of the screen. Okay, there's ample time. Because, Mark, I'll come to brokers in a second, because the market's got weaker and we're waiting for some news, something to trigger it to drop. Okay, that's how trading works. Now, can it make money? Yes. Well, I've shown you those winning charts. Show you some more. Is it easy? Yes, because you're following entry and exit. That's how trading should be for private investors. It should be easy. Can you do it with a day job? Yes, because private investors have got day jobs or they're retired. 30% of people watching will be retired. How much does it make? Well, I'll show you some more trades. I've shown you how much. We're looking to try and make 500,000 a month, some months more, some months more. Does it make life easier? Yes, because without doing it this way, you cannot monitor and have enough choice and find the quality trades. You're looking at one and you won't make enough is the problem. And computing power has moved on. So other people are using multiple indicators, multiple time frames and pattern recognition. You won't have the ability to power through with computers. Do we use simple rules checklists? I'll give you the same rules we give our trainees in our firm in a second. Okay, I'll give you the same rules. What we're trying to do is what Stephen Wright did there. Look how he didn't get in at this point. Why? Because that was 3 in the bloody morning. He wasn't awake. Nobody's awake 24/7. He got in here, and that's fine because it gives you enough of a move. We're not trying to be greedy. We're trying to get enough of a move. Not trying to be greedy. We're not trying to pick the exact bottom and the exact top. There's people who try and do that who end up losing. Okay, we've got a name for them. They're called losers, right? We're not trying to pick tops and bottoms. And who's behind this strategy? Who's going to give you an endorsement? Well, how about this? I'm so proud of this. That we created this technology. We did the research and development. We spent a fortune on it over the years. And then we got somebody like the chairman of the Chicago Board of Trade who put in print on my Financial Times columns book, gets to the heart of the matter of trading by clearly elucidating the methodologies of successful trading strategies. Clearly elucidating the methodologies of successful trading strategies. That's what he said about successful trading strategy. And he's the chairman of the Chicago Board of Trade, the world's largest exchange, and a massive trader himself. So I said to people, what more do you want? If I give you the strategy manually, what more do you want? And they said, well, actually, Alpesh, if you're so bloody good, we shouldn't be charged anything every day, every week, every month. We should be profitable. But also, if you're so good, stand by your word and mentor us for the rest of your life or until we're profitable. I said, fine, okay, I'll mentor you forever because I think I'm that good. I'll mentor you. And I stole an idea from my alma mater university. And I said, well, I'll create you little videos because there's a lot to take in as Jeff has said, oh, sorry, have I got the grammar wrong, Jeff? I apologize. I will check through that. I will create a little website. So all this information is there in bite size for you. And you can do it over a 30-day or over 12 weeks. It'll all be there. So you don't have to take time. Okay, watching the webinar, you can go through it. I'll give you a manual. I'll give you my signed copies of my 2 most recent books for trying this indicator, trying this software, because we want more and more people to try it and get the word out there that this methodology works, because we think that's the way we get to $1 billion technology valuation for this company. We think this is Google. We think our hedge fund has created the Google. We think this is, oops, Jeff, thank you. We think this is the Google of trading because it's an algorithm and Google is an algorithm and we think it's worth billions. And the way to make it worth billions is to make sure more and more people are using it, just like more and more people use Amazon or Google. And so we want people trialing it. So I'm giving people downloads of it and signed copies of my book. And to get them to profitability, I train them up for it. Because some people say, oh, but it's too much to take. Others say, download it and I can start straight away. Because I think without an indicator, this is what people are doing. Okay, they're digging away at one thing at a time. And I think that's just too much like hard work. With an indicator, it is more like this. Okay, with an indicator, you've got that power of mechanization. This is my most favorite apprentice. Most favorite person to use the indicator. 16, he left university at 16. He's about 30 now, by the way. I love the pipspredator. I now spend most of my time trading, and I love, as a novice, I know what to trade when, how much, and I can leave the exit price and get on with other work. My most successful apprentice, this lady, to use the indicator. Where's she gone? Naomi Wastel left University College London with a first-class degree in English literature, not in finance, in English literature. Came to then work for me for 3 years as my assistant. And then straight after that, joined Newton. She now runs a fund at Newton with £1 billion of assets under management. That's my most successful. Okay, you'd expect me to say somebody more than just the average. So Naomi's been the most successful. I should probably apply. I always joke to her for a job because, you know, from English literature to managing $1 billion fund. And is she grateful? Hell yes. Without over-egging it, she's very grateful, and it's great. We've got other people like that who've worked in the fund, who've gone on to work at big institutions. What I say to people is, I want you to use this, okay? I want you to use this for 30 days, not 7, not 14, not 21, 30 days. I'm going to give you signed copies of my 2 most recent books to keep, and a USB with all the information that's been here to keep regardless. So if you do me the honor of trialing this, we want to get to 1,000 people trialing this. I'm going to take them in batches of 25 because I'm going to mentor them, because sometimes they need mentoring, okay, to get them profitability because they're brand new to it. And I do the mentoring personally. And the reason I want to get 1,000 people through this program is when we get to 1,000 people through the program, according to our own mathematics, we'll get a valuation for the company of about 30 million. And based on that, we'll get investment from Google Ventures, Amazon Ventures, and SoftBank, and then we'll IPO the company. And in 10 years, it'll be worth $1 billion. Okay, it's as simple as that. That's the maths for us. And we're a British company, I'm proud to say. Okay. Oh, I wanted to show you Barclays. There it is. There's Barclays going upwards. Not every trade's winning, obviously. 70% on average, long-term average, and that's fine for us because we're not godly. Despite all of that, Warren Buffett does mess things up. Okay, so I want people to use it. I think it is the way that trading has gone. It is the way trading is possible with people. Now, you can do the rules manually if you wish. I just think and use your brain to do it, and that's fine. I just think if you're not using computing power, then you're gonna not get the same results because you're gonna have to work very hard. You're not gonna be able to scan as much, okay? And you're not gonna be able to, it's gonna take a lot more time to calculate stop losses manually. Now, look, you can see this working in real time anyway. This is gold against dollar 30-minute bars. You've seen we've been copying it all throughout the webinar, and now it's at the lowest point it's been in there because we sold short there. And there you go. And that's when we double down at this point. That's these indicators are then telling us it's still short. By the way, the indicator does everything for you. It looks at the multiple time frames, the multiple indicators, the pattern recognition, the stop loss, how much capital, how much risk you're taking, calculates all of that. You don't have to do any of it, even tells you alerts. Okay, so it's as simple as that. This is the way we think. What we want to do is we think we've got the Google of trading. We think our hedge funds created $1 billion technology. This is the way trading has moved on, as I've explained. This is how we're getting trades of a lifetime, not just thanks to Brexit, but actually, if you look at the gold one, that's got next to nothing to do with Brexit, actually. Trump might have said something for all I know. Then I want you, when you're trading, is not just to look at, say, sterling there, where it's short. Now, look, it was long. Now, how can we do that in 24 hours? How can we have the trading psychology? Well, you go long, and then you go short. Okay, there you go, long and then short. Well, computers can do that because it does the pattern recognition, does all of the AI stuff I mentioned for you, or you can do it manually, multiple indicators, multiple time frames, okay, and all the rest of it. But I just don't think people are going to be as accurate because they're fighting computers, they're fighting robots, and that's what's happened. All right, that's where you go if you want to sign up. I want people to join my mentoring club as apprentices. That's what it is. You download the software. You're part of the mentoring apprenticeship program. I'll explain what all that is. I take 25 at a time in batches of 25 because I'm doing the mentoring. Okay. We've got about 600 we've taken through the program. I want to get to 1,000 in due course. There's at any given time about 60 which are actively going through it. If I get less than 3 emails in a day, then I take on another batch of 25 through it. But you're in for life. I am your lifetime mentor. There are no costs every day, every week, every month. There's no data cost. There's no subscription cost. There's no upgrade cost. All upgrades are free for life. There's no ongoing cost. In future, not for you guys, that's going to be £2,000. Okay. Oh, Steve, try the PayPal route. It should let you go because I can see Kev's got through. I can see Kamlesh has gone through. I can see Pratik has gone through. And Daniel, yours has gone through. I'm excited for you as well, my friend. You should try the PayPal route, and I'll show you where on there in a second. Okay. In future, not for you guys, when we expand it out, before we IPO it and we take in venture capital investment, it's going to be £2,000 a year for the software, £2,000 a year for the indicator. For you guys, it'll only ever be this one-off fee because we want to get that first group 1,000 through it, and the mentoring and the software all go in. It's lifetime. There's no upgrade costs at all for anybody. If you go to alpeshpatel.com/here, you download the software, you've got access to me, you've got access to all the courses. Works on Mac. Yes, Jonathan works on Mac. Yes, Michael, it works on Dow, FTSE, gold, oil stocks as well. PC and Mac compatible, like I said. We'll install it for you if you can't. We've got a team who will install it for you as well. It takes 10 minutes to install. If it takes longer, we'll do it for you. You've got direct access to me as well, and I explain what the course is. US dollars, it's $1,300, or euros, 1130 or 997. You click on add to cart. You've got two options. You have got both PayPal. You don't need PayPal to use PayPal, or you've got MasterCard Visa. Okay, you put in your country. If you're a company, then there isn't VAT if you're in the EU. If you're in the EU, otherwise there'll be VAT. If you're outside the EU, there isn't VAT. Might be one reason to leave. Okay, so there you go. And then you fill that form in. One of the things that I absolutely love about this is the mentoring courses and the mentoring website. And let me just explain all that for you. Okay, through the mentoring course, and you've got access to it for life. Remember, and every week we show you about 15 trades that we're doing every single week. Every Saturday, i.e. tomorrow, we're going to do live webinars for apprentices, 11 a.m. on stop losses, 12 o'clock on entry. So you're never left alone. 1 o'clock on limit orders, 2 o'clock on trading psychology, 3 o'clock on money management, 4 o'clock on adding to winners. Every Saturday for apprentices, you've got live webinars. You've also got the course where every week I put up 15 of our live trades, okay? 3 times a week, we put those up. Every morning, apprentices can read the market news. Now, you say, why do you give so much information? Why not just give them the algo? Well, some people just want the algorithm and the software, and they just want to trade off that. Others, they say, no, Alpesh, I don't just want to do this. Sometimes we get stopped out straight away, that's fine, but we also get this massive profitable over there. Fantastic. Thank you. Make the profits off of that. Somebody's just asked for sterling US dollar. There you are, my friends. Yep, we're still short on that. Don't worry. Somebody's asked for the gold one again. Yeah, it's fine. We are still short on that. And yes, you might just download the indicator, start doing that today and say, hey, I'm profitable. So the reason I give so much information, give the modules, and you've still got access to me, and I created all these modules. You know, you've got review slides, tests, is because some people like videos, some people like tests, some people like courses, some people just want the software. And that was the reason we wanted every single method and approach that people have found useful. We wanted to do it that way, and that was the reason. Okay, and that's what gets to profitability. I want people to get to profitability, because if you don't get to profitability, we don't get a valuation of 30 million, and that's my vested interest. Each person who gets to profitability is worth about £100,000 in valuation to the company, because for the venture capitalists, the way they look at it, for every one of you, there is 100 people out there who could also get to profitability, and that's how we scale up. That's how multiples are worked out in valuations of companies. In case you want to know the background of what our thinking is, this is spun out from the hedge fund. So as this technology then gets floated, guess what? It's a technology that the hedge fund's invested in. We get closer to getting to the valuation we want for the fund. Okay, trading with, and so this module was one thing we created. And the reason was we actually took what we were teaching our people in the fund, and then we said, wait a minute, if we're teaching them to be traders, why the hell are we not giving it to other people, this technology? Because it's a Google of trading, it's $1 billion technology. And then we added on, well, wait a minute, maybe they want to be part of a club, a mentoring club, a community. So I let them be part of a community, okay, where they can ask questions, they can search any piece of information. They ask me questions, I answer them. How could you find the time, Alpesh? Well, guess what? Instead of messing around on Facebook, I got this. So people ask me a question, which they don't often need to ask me, okay, because all the information's on there. But if they ask me a question, I go tap, 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 tap. Great, I can answer the question there. So December 14, top picks, we'll tell you every 3 times a week. We'll tell you what the top picks are. You'll see the charts. You're learning through that as well. Some people buy it just for that alone. They say, oh, actually, this is like a newsletter. I'm getting all of these picks and for life, and I'm only paying one off. Brilliant. I've got the trades. Look at how many you've got there. You've got a whole bunch of them, which are not even the ones I've talked about. You've got Litecoin, Bitcoin for those who like crypto, because we get special requests, and we do that as well. Netflix, which I'm long on, by the way, just in case you want to know. New Zealand dollar, Japanese yen, got nothing to do with Brexit, and that's why we did it. That's why we did it. New Zealand dollar, Canadian dollar, nothing to do with Brexit. That's why we did it. So you get all of that information, PepsiCo as well on top of it, okay? Let alone, and that's why we wanted to flood people and astound them with how much they get. Not just the community site, but the modular course, access to me for life. Jonathan, there are no upsells. There are no costs at all. Michele, the data is live, real time for free. All upgrades are free for life. We're on version 4 of the Pips Predator indicator, and we upgrade it regularly because obviously algorithms, artificial intelligence, our know-how, research and development always changes. Things change constantly. There's a whole bunch of you who've gone through. Leon, it's gone through. Pratik, I think I already said, has gone through. Cami, yours has gone through. So's is yours. Barbara, Patrick, it's gone through as well. And Patty has gone through. Thank you very much. I'm excited. That's the only thing I want from people. I want them to be excited. Let me show you something else. On the 12-week course, it's very, people sometimes go, it's great, it's very small, you know, tiny little bits. See all of this, right? All of that is over a 12-week period. You can do it longer if you want. I'm sorry, shorter if you want, or longer. It goes through everything, wins and losses, few big win. And the reason we did it in small bite sizes is we analyzed how to accelerate learning. And we found that the best way to accelerate learning is to use videos, is use text, is allow people to learn from the comfort of their home. You know, the weekend's coming up, they've got time, Christmas is coming up, they've got time, they're more motivated at this time of year because you've got New Year's resolutions to learn a new skill. Some people, you know, they've got a money back guarantee, so they use the money back guarantee, they earn the money, and then they go, forget it, I'll have my money back, please. And that's fine. 10% do that, or the 10% will say, oh, I've run out of time to do things. I've decided that, you know, trading's not for me, and that's fine. At least you learn that. What we realized is when we fill in this bespoke form for them, they fill this form in on Google Forms, so I get to see every single apprentice personally, okay, through the form or in person, and see what their strengths are, their weaknesses. I do a SWOT analysis, strengths, weaknesses, what are the threats they're trading, what are the opportunities, what areas should they focus on, how experienced are they, and then I can give them a personalized program, just like your dietitian would. Okay, so we do that, and it's got the Saturday webinars for them as well. All of this, people go, wow, how come we're not paying going forward? How come it's just one? Well, for the first 1,000, it's like that. We've got through about 600 people who've taken advantage of it. So I think she thinks 650 have taken advantage of it. Want to IPO it next year. I want everybody who's an apprentice, subject to lawyers, and I think it'll be fine to have free shares in the IPO company, so they make the money back off the back of that anyway. Ideally, subject to lawyer confirmation that I can do that, and I think I can. I can't see why not. Okay, and like I said, Saturday webinars as well. Give them all this information, data, every day, live trades, live information on the news we're looking at. Any one of those things is worth this. People go, well, why do you do it? Well, because we're looking at the bigger picture. The bigger picture is to use the same profile I have, or, you know, Richard Branson would do this, use the profile to get the message out about technology, which I talk about every time I'm on BBC or CNBC or Bloomberg. Talk about the technology and how we forecast the market. That's what gets us to the technology valuation. Then get the people to be profitable, and through that, get them into the more of them who are making money is the more of them who are the more of them who are making money, the more likely we're going to be successful as an entity. Okay, the more of them making money, the more likely we're going to be successful as an entity. The maths is really simple on that, and that's what we worked it on. Like I said, you got access to me. You get to keep the books just for trying it. Okay, you get to keep those books anyway, just for trying it. What other questions have we got? Oh, how do you know what size to trade? Actually, there's a manual that goes with it, which explains it. You've got direct access to me as well, which tells you position sizing, explains everything that was explained in the webinar as well, and how trading has moved on. Actually goes into some of the really technical stuff. Okay, we also do pre-trading assessment online as well. I'm going to show you not just that, but ongoing, you can tell me how you're doing. I'm going to show you something which I don't often show people. Let me show you one thing that one of my apprentices sends me in every fortnight. She's fantastic. She's just she's very good. She's very thorough. And you don't have to be this thorough, but if you're serious about trading, you might want to be this thorough. Okay, and she sends me in her trades, and she does it on a demo account. So her, you know, she's trading small accounts sizes. She writes all of this down. I love it, you know, and she'll show me the trades, and she'll say, look, I did this, I made a profit, or whatever else I did, and so on and so forth. And she'll tell me what losses she's made. She'll tell me what profits she's made. Okay, and she'll go through it, and she'll run through it, and she'll send me scene grabs, and I tell her, send me this, and I give her a analysis on it. That's what I do. Why? Well, guess what? I love what I do. I love this. And it's very easy to do nowadays, to do all this, thanks to modern technology, thanks to webinars, thanks to all of this. And that's the level of direct access she has to me. And people go, well, that's incredible value for money. I said, yeah, well, it's not going to last for long, because obviously what we're doing is we're doing it now for the first 1,000 club. When they're profitable, they don't need to send me all of this. When they're profitable, okay, they don't need to send me any of this because they're profitable. And some of them start really small, as she's done. So she might only make £20, £25 here and there, but it'll get her on a daily basis to a 500 a month, which is what she's after. Okay. And when they're profitable, they don't need to bother me, like I said. And that's how it works. And that's how I can manage to do it. Okay, it's as simple as that. Let's just have a look at, so this is her trades. Whoops, there we go. Notes for Alpesh. She puts in very thorough. So, you know, we give this template to people if they want to do it. If they don't have to, you can make a 5% net return in the first 2 weeks of November. Okay, so let's assume 10% in a month. But let's assume she didn't do any else. She only made 5% net profit. This is how it broke down for her in the trades. And so we're going to look at for her, how does she increase that profits and so on. And that's how we do it. We take them in and build it up bit by bit by bit. And 5%, yep, okay. And she's an apprentice. Great, fantastic, love it. And that's what I want to get to. How do we get to people to profitability? And it's the same training everyone gets and they still get me. No, it's a one-off cost. It's a one-off cost for now. It is going to be £2,000 a year for mentoring, £2,000 a year for the software. Not for you guys. For you guys, it's a one-off. But in future, it'll be that. Saturday webinars, Simon, are only for apprentices, I'm afraid. Jillian's got a question. Just looking through my iPad here. Okay, Alpesh, is it really suitable for a beginner? I'm not very good for computers. We'll actually install it for you. We'll make sure everything's working. It was actually built for a beginner. Worst case scenario, you'll work out whether or not trading's for you. You know what we did? This is what people said they wanted. That's why we delivered on it. They said we want instant download. We want a hedge fund manager behind it. We want somebody who gets paid by the Financial Times, i.e. Financial Times endorsed person, to say, yes, this is good quality. We want somebody who's paid by Bloomberg TV for his TV show to say, yes, this is endorsed. We want somebody who's an academic. Oxford University is where I do some of my research and development. I give my annual lecture there. No repeat or subscription cost. They said, fine, I won't charge you repeat or subscription cost. No hotel cost, no travel cost, no sitting in front of a screen. Yeah, there's some of these people, they charge you $5,000, then you sit in front of them. Can we go... And now you'll go see, well, we said we'll give you those trades 3 times a week and what we're reading every morning in the news. So we'll wipe out any competition, so-called competition that's out there, because all these other so-called software people and so-called educators, they don't come from this background or this pedigree. Okay, and so we thought, you know what, this is a technology. This is where we realized we were Google of trading, because what we realized is we really can take almost 100% of the market. Well, why not 100% of the market? Okay, why not 100% of the market? Okay, and that's our intention. We think we can corner the market in this stuff because we think other people just don't get what's out there. And if I was going to say what are the steps to success, I'd say this. You watch the webinar, you download it, you install it in 10 minutes, or we'll do it for you. You follow the signals, and then you got me as mentoring. Let me show you something great. I want all apprentices to do. Either visit me at my office if you've got the time at 84 Brook Street, or follow me on LinkedIn. Join me on LinkedIn, which is a free networking site where you'll see I'm the real deal, because you'll see all the other people. And by the way, as you sign up, let me know so I can give you a shout out. Okay, if you've got any problems signing up, let me know. If you've got any reasons why you think we're missing something, let me know, because we want to create a $1 billion British company. So let me know. Okay, so what we do is we have a team. Well, we've had people who've used and licensed the technology in the past. We've got a whole team who will install or answer your questions, or send them. 90% of the time, they send the questions to me because I'm your mentor. But if it's a technical thing, they'll answer it. If a technical thing like, can I speak to Alpesh? They'll go, yeah, here you go. Okay, we've got a whole bunch of people very impressed with the level of help and assistance. That was Vinay Thakura, a whole bunch of people. Derek Goddard. Dear Alpesh, many thanks for your kind understanding and gifts received. The refund today. I even put down the 10% refund. I'm not just going to put down people who are over the moon. He said, look, you're a rare breed, best wishes. I've got no issue saying that. 10% say, look, it's not for me. And that's great. They learn that trading's not for them. Saeed, you're a gentleman, a scholar. Thank you. I have to say, I think it's much better this new way. Maybe it's just me, but I find it far easier to interpret and follow. Great. This is how trading is. I agree. This is how it is. Ian Simon, it's so reassuring to know that when a small IT difficulty arises with pipspredator, I have someone to turn to if needed. That's the whole point. We're trying to create a $1 billion company which blows the socks off people, makes them absolutely over the moon. Okay, follow me on LinkedIn. There's phone numbers, there's Skype numbers. Call me if you want. If you're an apprentice, you're going to get access to me. My job on LinkedIn is introduce you to anybody you want. Some people say, oh, I'm going to get this for my son or daughter because I want them to have a career in finance. We actually even give a certificate to you when you complete the course. You can put me on your CV as a referee because I'll be able to say, well, they've completed the course. Through LinkedIn, you'll see all the people I'm connected to. If you're an apprentice, join me on LinkedIn because you will. I'll connect you to anybody I know. Not necessarily the governor of the Bank of England I'll connect you to, but anybody I know. You'll see the CEOs of banks who endorse me and so on. So what you will see on there is my credentials, the work I do with Downing Street. I don't know if that's a good thing to say at the moment. Okay, it is a good thing to say. Of things I do on technology and entrepreneurship and everything else. Okay, so I'd say that with apprentices, please do that. Please join me on there. Like I said, what I want is you to get to profitability. Brilliant, Niraj. Shout out to you as well. Delighted that you're on board. And if you're in London, I want to meet apprentices. And these are the benefits. Why do I try and blow people's socks off? Well, I think this is where trading's moved. And I think at the moment, if you're not doing it this way, you are becoming fodder for brokers who are going to say to you, who are going to put you in the 70% and make you lose money. I want to be on your side. In fact, what we do when we send people to brokers is tell them, hey, he's with Alpesh. If you're a broker, you better treat this guy properly. Otherwise, Alpesh is going to give you a shout out on international TV. So it's a bit like the mafia. Hey, you're part of my club now, my friends. Okay. So we want to make sure that you benefit from all of that those credentials provide. And we give help and advice when you get into trouble with bloody brokers, because we don't like brokers, do we? As well. That's the GBP cable trade at the moment. It is still well short, and that's fine. We're still well in profit for that one, Matthew. So that's where we are on that one. And this is the way I think trading is going. And my worry is if people who don't realize the evolution of trading, they're going to be in the 70% who lose money, or they're just going to be working like crazy but not making enough. So just to recap, look, instant download, full customer support, step-by-step instructions, access to me for life, mentoring for life, 30-day money-back guarantee, 2 signed copies, plus USB, plus a whole bunch of other trading goodies that come in with that. Customized trading videos on any issue you want, not just the courses. If you say, Alpesh, I want you to explain this. Every week, you'll see the trades that we're doing as well. That goes in the community site. You're all part of my trading club. 6 live webinars every Saturday, Skype access, email access, meet me, online courses, software, one-off payment. I mean, we want to blow people's minds on this, and the reason is we stole the idea from Amazon, which is if you want to get into being $1 billion company, you make people go wow. You don't say, oh, you got this, you got this. Oh no, you can't do this. You don't give them 7 days, 14 days, 21. Give them 30 days to. You give them free gifts. You actually pay them to use it. The books are worth £50. So it's £50 worth of books you're going to get for trying this, and I don't mind because it's part of our marketing to make sure more people know about it, because this is a hedge fund technology which we think is going to be like Google. We think, for those of you who know fintech, this is going to blow people's socks off. This is going to revolutionize the fintech market because nobody's done the Google of trading yet. And the only competition, so-called competition, trading educators who haven't got any credentials at all. And the reason we know they haven't got credentials, they're not FCA regulated fund managers because nobody had given them the money. They're never asked to be broadcasting their views on TV because they're not paid to give their views on the Financial Times. So they're so good. Why isn't the Financial Times paying them to give their diary of their trading? Okay, because they're not. It's as simple as that. And we're going to blow those people out of the market because trading is also an aggressive business. And I'm giving fair warning to those so-called educators. We are going to wipe you out because we want private investors to get profitable. We want them to get profitable, and you guys have had it too good. The so-called educators have had it too good for too long, wiping those people out. You don't need to have FXCM. You can use any broker you want. You don't need an FXCM account. There's multiple brokers. You can use any broker's MT4. We will show you, or we will tell you which ones also you can use. I recommend multiple brokers. I'm a brand ambassador. It so happens, and I've shown you for 24 option. You don't have to use those, but I am a brand ambassador for them because I've met the team. They were introduced to me by Bloomberg. Anybody who Bloomberg introduces me to, so you can use their MT4. And by the way, you can trade through any broker. So you might use other software alongside this. Use these signals. Okay. So you might be looking at, for instance, euro dollar on this. You might be using, can you see it there? One particular broker there, but you might on your phone place the trades using a different broker. Do you see? Does that make sense? You might use a different broker for a different for placing the trade. But don't worry, Niraj, we explained all of that. By the way, Niraj, Simon, who have we got? Mohammed, I'm not going to go through all the names. All of you signed up as apprentices. I'm going to send you an email. Keep an eye out for that straight after the webinar, personally from me with my private email address. You can have constant contact with me as well. Steve, it went through as well. I'm excited for you. So wait for that email as well. It'll give you the login details and how to download, and we'll download and install it for you as well. So don't even worry about that part of it as well, my friends. Okay, so you've got all of that protection. And yes, some of you will download and install. Yes, you can start trading instantly, and you might look at this and you might say, right, I'm going to start straight away, Alpesh. I'm going to start trading instantly. I'm more than happy to do that. Others will say, Alpesh, I'm really new to computers. Can you show me how to do it? Now, I told you Barclays at the start. I've had Kevin ask me about Barclays. Well, there we go. It's the highest point it's been during the webinar. I mean, that's the point of this software. Look, you can see that was the trend. I said Barclays was one of the ones. And you can check the price if you wish. Okay. Sometimes people go, what? How did that happen? Well, if you watched the webinar, you saw. Okay, there you go. And it's at the highest level it's been. And that's the idea of the trend. Now, you might download this in 10 minutes, start trading this, and by Monday, you might say, hey, whoa, take your time, do a demo account, observe the market. Don't rush. That's the best advice I can give you. Don't be greedy. You've got 30 days for it to prove it to you. I have 100% confidence you're going to be over the moon. Therefore, you don't need to rush. I'm not going to say to you, oh, bung loads of money into it. What I'm going to say to you is, I know I'm 100% confident. And the way I can prove my confidence, somebody once said to me, if you're so good, why is it not lifetime mentoring from you? Because surely they're going to be profitable and you won't need to mentor them for life. And I said, good idea. I agree. Let's do it. Nobody else does that. Nobody on the planet will offer you lifetime mentoring, lifetime support without charging you. You know why? Because they know their methodology doesn't work. Listen, Niraj, Steve, the team, I am going to Jeffrey, Michael, Stephen, Mohammed, Kalpesh. I am going to email all of you as well. If there's no more questions, I'm going to finish the webinar right there, if I may, if everybody's okay with that. Okay, I'm going to finish the webinar right there. I hope you're fine with that. All right. If there's no more questions, I'll wait a second for questions and see if there are. But if there are none, I got Q&A. What's the Q&A? No, that's fine. Okay. So I want to thank everybody who's been on this. And one of the things I want to do is turn the screen share off for a second. Oh, camera's not working for some reason. I'm going to turn off the camera. I'm going to turn it on. No, not working. Okay, fine. So let's go back to the screen share. Very odd. We had a few gremlins today, which is very odd. We don't normally get gremlins. Okay, so I apologize. Listen, I want to thank everybody who's been on this webinar. I want to thank you all. And I want to say to all, there we go. I want to say to all the apprentices who've joined, I'm really excited about your journey. It's a journey. Christmas is a great time because people have got a bit more time to learn. They've got a bit more time on their hands. They've got motivation to be successful. You need motivation because they've got the New Year's resolutions coming in. So they've got motivation for that. Christmas is also a good time because it really focuses the mind that we can't rely on one income in life alone. So we want to learn a new skill. We want to try and have a side income, but just observe the markets. Don't try and rush it and get a side income and get your Christmas gifts paid off in the next 2 weeks from this. Take a bit of time. Thank you very much, Jeff. If you've enjoyed the webinar, let me know. If there's any ways you want me to improve, please let me know. Always looking to improve, always looking to get better, because there's always ways of doing that. I want to thank everybody else, especially the apprentices. So thanks everyone for being on the webinar today. Thank you all very much indeed. I've been asked by Kiran, who's just gone long on the FTSE 15. No, he's looking at FTSE 15 minute. I've pulled it up, Kiran. It's here. The FTSE 15 minute. Yeah, well, you can see the signal. It's gone through that level. Ideally, you want to have entered when the price was there. So I wouldn't enter now because the trend's already started, but I can see what you're saying, that it started. Should I still get in at that point? It looks like it's moving higher. Ideally, you want to start, look, there was an ample window of opportunity here, actually during the course of the whole webinar there. And now it's just shot up. But here it's already moved quite a bit. So no, wait for the next signal. If you're and that's why we look at multiple things and we have computers doing it, because you've got a lot of stuff here which can do that. Okay, so thanks, and you're an apprentice, so we'll discuss it more offline. Don't worry, we'll discuss it more offline, my friend.